markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg, and this Bloomberg Business Flash is brought to you by Oracle. Attention, growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. The Dow higher, the S&P, NASDAQ both lower. Russell 2000 index down 0.9%. To put that in context, S&P down 0.6%, NASDAQ down 1.4%, and we've got the Dow up 0.3%. Traders are awaiting key inflation data after a massive recalibration of Federal Reserve rate cut wagers. Big tech, the big story, getting hit hard in a renewed bout of selling that has engulfed powerhouses like NVIDIA, Tesla, and Apple. The 10-year 4.80% now, with the 2-year 4.41%. Gold down $25 the ounce. Spot gold down 0.9%. Gold now at $26.64 the ounce. West Texas Intermediate crude oil up 2.7%, $78.67 a barrel. And Bitcoin now lower by 3% at 91,489 on Bitcoin. Macy's has issued a slightly more downbeat outlook for sales in the current quarter. Macy's shares down 6.4%. Among other retailers, Abercrombie & Fitch raising its fourth quarter sales look, but the increase not enough to reassure investors that the retailer can keep up with the fast pace of growth. Abercrombie & Fitch down 18.4%, and Lululemon Athletica expects fourth quarter sales to top market expectations. Lululemon up by 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Charlie, thank you very much for that. Charlie Pellet with your Bloomberg Business Flash. Matt Miller here, sitting in for Alex Steele, Emily Grafeo sitting in for Paul Sweeney on a day when the markets are down again. I looked this morning at the open, Emily, we were looking at 57.82 on the S&P 500. You know what's interesting? That's exactly the closing level on November 5th.
Really?
Yes, the day of the U.S. election. After that, of course, we rallied higher. I think we were in the 5900s already by the morning, the open of November 6th, but we've erased all of those gains and then some since we knew that Donald Trump won the presidential election on November 5th. We were also at 425 on the 10-year yield back on November 5th, and now we're looking at 477. So 479.64 right now on the 10-year yield. So we're up a solid 65 points from, or 55 points from there. The Bloomberg Dollar Index also much higher. Right now at 13,022. We were at closer to 1220 back on November 5th. So we've seen all the wrong assets rise in terms of, I guess, bond yields and the dollar, and the right ones fall in terms of the stocks. I want to bring in Gaurav Malik to talk a little bit about this. Chief Investment Officer over at Palace Capital Advisors. Does this repricing make sense to you, Gaurav?
I wouldn't say that it makes sense. I mean, it's hard to make much sense of the markets these days with a lot being driven by sentiment. I think if you look at fundamentals from our standpoint from November 5th till now, in terms of actually what has occurred, nothing much has changed. I think we still expect that we're going to see a pretty solid Q4 earnings season. We remain excited about earnings for 2025. I think the places where most investors are taking a pause is really what's the action the incoming Trump administration is going to take on the policy front. So in some areas, I would say, yeah, a bit of a surprise to see the up rally and then the downtrend in markets. But from a fundamental standpoint, I think for stocks and earnings, we haven't seen much change.
So even after Friday's jobs report and the moves that we've seen in Treasury rates, you're still optimistic, then it sounds like, on the outlook for stocks for 2025.
We are. I think that, as we look at the fundamental drivers, which from a macro level, we think about what's going to occur with GDP growth. I think that looks pretty solid. when we think about companies' own projections, and again, as we get through Q4 season, we'll get a sense of how they're revising as we look at 2025. But again, expectation of about 5 to 6% revenue growth. Margins for the S&P are at all-time highs, which justifies, frankly, the multiple we're seeing at 21. So many things I would say that don't worry us too much. I think, yes, on inflation and yields, a bit more surprised on that front since November. I mean, again, but the market has been so volatile with incoming macro data that, in the morning I was talking with our investment team. We were talking about what's the projection for the end of the year. And I said, I'm just nervous about making a projection because the economic data that's been coming in and bond volatility, frankly, has been so high.
What about if we were to get, I'm not making a prediction here, but a Fed hike? Because when you look at 2-year yields, that is certainly what some bond investors are expecting to come. Do we need a cut for your kind of optimistic view to continue to play out? Or if we were to get a hike, could we still see stocks staying resilient?
So hike seems something that would shock markets, frankly, right? So now we're talking about a slightly different way to view that situation that would indicate to us that the Fed doesn't know what they're doing, right? So far, they've been guiding us towards this fact that, okay, we think inflation is going to be under control. Now, again, that's been pushed off a little bit. Perhaps we were expecting a 2% number would have showed up by 2025, and I think that's looking more like 2026 expectations. But directionally is indicating that they're still in a mode where monetary policy is tight, and they're going to keep it at that level. So a change in direction on that side to say we're going to certainly start doing hikes to tighten it even more, I think that would send a signal to the marketplace the Fed doesn't know what it's doing. And then you're looking certainly at a spiraling effect on stock markets. So I think that would be very concerning.
So, I mean, we get a couple of data points over the next couple of days that are going to mean a lot to the Federal Reserve. At least they'll mean a lot to how markets forecast what the Fed's going to do. We get PPI tomorrow, and we're looking for 3.8% on the core year over year. That's pretty high, right? And then we get CPI on Wednesday, and there we're still looking for 3.3% on the core number year over year. The Fed wants these numbers to be 2%. So they're still pretty far away. Don't rates need to be restrictive?
Rates do need to be restrictive, but again, when you think about the lagged effect of policy changes, both on the up and the down, still maintaining rates at a 4.25, 4.5 handle for the Fed is still tight. So maybe there isn't room for one more rate cut, which clearly the market is also pricing in at most one rate cut now till the end of the year. I think that is still in restrictive territory. Now, the inflation picture is also sort of clouded by the fact that there's a huge difference between what's occurring on the services side and on the goods side. On the goods side, we're seeing disinflation. We're seeing disinflation occurring in most of the parts of the world on the good side, right? That's going to flow through to some extent, again, notwithstanding what's the path the Trump administration takes on tariffs. But again, that's an effect that is disinflationary. So the real question then leaves us with is what's going to occur on the services side. And I think at a 4.25, 4.5 level, policy is restrictive enough that we will see a lagged effect show through in inflation numbers. Now, again, not to say that we'll get to just reiterating the fact that not to say we'll get to a 2 handle in 2025. I think that's not in the cards, and we don't see that occurring. But I think it gives us some confidence to say that 2 is a number that's possible when you look out at the end of 2026.
All right, Gaurav, thanks so much for joining us. Appreciate your insight. Gaurav Malik there is the Chief Investment Officer at Palace Capital Advisors. Now, we have this internal chat, right? And I was just typing with Emily, like, what is it restricting? Because we saw the S&P rise 25% 2 years in a row. We added 256,000 jobs. Inflation expectations are still over 3%. And Emily, you typed in Bitcoin.
Holding above 100K.
It has held Bitcoin back. I guess you could say those rates are restrictive in one way. I want to bring in an expert to talk about Bitcoin right now, and we're going to do that. Mike McGlone joins us. He is our commodities analyst from Bloomberg Intelligence. And Mike, before we get to the ones that really matter, let's talk about Bitcoin. The run-up was incredible. You called it multiple times on this program last year. 100,000, we got there. But now we're back down to $91,000, $92,000. Is this because in a market slump, when someone gets margin calls, he sells Bitcoin first?
You know, well, Matt, I like how you started out as an expert. You're as much an expert as I am, and I know you only ask me questions you know the answer to. And the key thing is 100,000 is a pretty significant threshold, and the hopium and the optimism for more highs was extreme. And people like Michael Saylor, Double Dog Daring, Warren Buffett for not being in Bitcoin was a classic example of you don't mess with the market gods, and the market gods are proving it's just too high. So I think we're all on the back of what Gina Martin Adams says, our chief equity strategist. Equity market's too high. Bitcoin is basically 3 times the volatility of the stock market, and it's going downward, and it might have a lot more room, particularly as Gina says it's about time we test that 200-day moving average in S&P 500, which is still about another 4% below the market. So I view cryptos as a pretty significant peak, and the key question is it going to get better than last year? We had this president who was an antagonist switched to a zealot, and I just don't think things are going to be much better for things like Shiba Inu.
Shiba Inu coin. All right, well, let's get to oil, Mike, because we don't have a ton of time with you. Oil rallied to the highest level in 5 months.
Brent was over 80,000 when I looked this morning.
What is driving that, and does that continue to rise?
Well, you've heard the fundamentals are this potential U.S. sanctions on Russia, but what's really driving it is future speculators. Hedge funds, speculators are really long. They just got longer, and if you just look at open interest this year, it's jumped up almost 10%. I mean, it typically typical increases this time of year as people enter new positions, but speculators are getting long at good resistance in an enduring bear market, and I think they're just tempting the markets more likely to go downward because we have a lot of spare capacity from OPEC, a lot of spare capacity from U.S. and North America, and China's demand is declining. Are prices going to help that by spiking or go lower? So I think it's more of a short-term blip. Bear markets are famous for that and more likely to go lower.
I asked a buddy of mine, an investor down in Texas, why are prices rising when we're going to drill, baby, drill.
That's right.
And he said, you know what? The producers don't have the CapEx right now. Is that true?
I've heard that many times, Matt, but you can drill one drill now and go out lateral 20 times 4 miles. It's just the technology is overwhelming for drilling technology. Demand is declining. Diesel demand in the U.S., China, India, and Europe is all in decline. And we have plenty of supply. So I think this is more a short-term blip in a bear market. But again, it's the first time of the year. It's the first couple weeks of the year. Specs are getting long, and they're doing it pumping through resistance. I'd like to say, yeah, good luck with that one.
All right, Mike, thanks so much for joining us. Mike McGlone there is the senior commodity strategist for Bloomberg Intelligence. He talks about about everything from timber to Bitcoin with us. Appreciate your time. When we come back, we're going to get even broader. We're going to bring on another Michael, Mike McKee.
Michael heavy show.
Bloomberg
Michaels and Matthews.
Economics and policy correspondent. Talk to us, of course, about what to expect from PPI and CPI tomorrow. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow higher, the S&P, NASDAQ, they are both in the red. We've got the 10-year right now, 4.79%. The 2-year, 4.39%. S&P down 35, decline of 0.6%. The Dow up 97, up 0.2. NASDAQ lower by 246 points now, a decline of just about 1.3%. A sell-off in the stock market's most influential data group, adding to Wall Street's jitters as traders await key inflation data after a massive recalibration of Federal Reserve rate cut wagers. We'll have more with our Michael McKee coming up in just a moment on this week's PPI and CPI reports. Again, 10-year 4.79%, the 2-year 4.39%. Gold down $23 the ounce, down 0.9%. West Texas Intermediate crude advancing 3.1%, 78.94 barrel, and Bitcoin with a 91,000 handle, 91,725 right now on Bitcoin. It is down 2.7%. MicroStrategy, by the way, has bought another 243 million of Bitcoin, the 10th consecutive weekly purchase by the enterprise software company that has turned leveraged Bitcoin proxy. Again, MicroStrategy down now by 4.1%, Bitcoin down 2.6%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie, thanks very much. Charlie Pellet with your Bloomberg Business Flash. Matt Miller here, in for Paul Sweeney. Emily Graffeo in for Alex Steele, or maybe
Vice versa.
Yeah, who knows? In any case, they're gone, and we're here. We have Michael McKee, Bloomberg International Economics and Policy Correspondent, with us in the Bloomberg Interactive Broker Studio to talk about, well, I guess economics. The two big numbers coming out this week are PPI and CPI, so we'll get a read on inflation, and that means a lot to people watching the Fed. So let's start there. What do you expect? The numbers on the terminal look pretty big.
Well, PPI in particular is expected to rise significantly, actually on a headline basis unchanged, but on a year-over-year base effects basis, we go up to 3.5% from 3%, which is a big jump, and may be sort of the creaking floorboards in the haunted house of the markets these days. The PPI doesn't translate directly into CPI, but a lot of it goes into the PCE, which is the Fed's favorite inflation gauge, and right now it looks kind of like mixed. Some of the elements may not be that inflationary, some may add. So we'll see when we get through PPI what the true inflation nerds think is going to be the PCE number, because that's the one that'll determine eventually what the Fed does. Now, the markets are probably going to react to PPI and especially to CPI, because it's supposed to go up again for the fourth month in a row on a year-over-year basis, and that is kind of scary to folks right now.
Talk about that fear right now and what's driving that, because it does feel like these data reports are going to, like, any little slip here could actually mean more for markets just because of the jobs report that we saw on Friday, and because rates have been inching higher. Strategists are pulling back their projections for how many cuts we'll get. Talk about that fear.
Can we, how long can you hold your breath, I guess, is kind of where the markets are now. Ever since Donald Trump was elected, there was a big rush forward into stocks, and we saw yields go down, and the Fed was cutting rates, and then all this talk about what is he going to do is really starting to weigh on people, because we're not there yet. It's a long interregnum, and you've seen people start to try to calibrate what the tariffs and other policies he might do would do to the markets, and it's really hitting the bond market most. The interesting thing is, of course, the Fed's basically said we're not going to be cutting rates at the January meeting, and the jobs report last week moved everybody out, and a lot of houses now are saying no cuts, let alone any.
What drove that jobs report? I mean, I know it's the margin of error is big.
The margin of error is big. We don't.
And people don't respond to surveys anymore, but still, it was a big number, right?
It was a big number, and it was in many categories. It wasn't just one category pushing it up. It was the same ones we usually see, like healthcare, and retail may have been a little bit of a seasonal factor. More people were hired later in the year because of the late Thanksgiving. But now that everybody's priced everything out, then the next question becomes, if you're sitting there on a trading desk, does the Fed actually raise rates this year to push down inflation? We're not there. The Fed's certainly not there yet, but the markets are getting there. If you look, the 2-year note yield is now above the effective Fed funds rate,
That's insane.
which is only happens when the Fed is raising rates.
Right.
So it's just poked its head above it. It's only about 7 or 8 basis points above it, but it is there, and it does suggest that people are beginning to incorporate that as a potential theme, which then obviously bleeds over into the stock market.
Well, if the economy is doing great, if the labor market gets tighter, and we slap big tariffs on all of our major trading partners, and then deport, 1 million workers, that seems inflationary, right?
Well, that's the problem, and that's what people are trying to incorporate now, is that the policies as a theory would be inflationary. How they're carried out will have a big role in how inflationary, if inflationary they are. If I put a big global tariff on all at once next Monday, then you're going to see a major market reaction, and you'll see inflation go up 1 month. But then if you don't do anything further, it stays at the level it's at, so inflation doesn't continue to rise. If you stretch it out, then you're going to have an issue over time. So those are the kind of things that the markets are trying to figure out. And basically what we've had is people came into the election thinking Trump wins, and and the Fed is cutting rates, and so there's an investment thesis there that is now being challenged, and we'll have to see whether people can get over that or not.
So your title is Bloomberg International Economics and Policy Correspondent. So I wanted to bring in kind of that global perspective. When you look at the U.S. bond market, what is that telling you about how investors are thinking about global growth?
Well, the rest of the world has not kept up with the United States, so you start from that. And then you start with some unique experiences like the UK, which has fiscal issues and issues with the new budget that's been presented and concerns about inflation, much more so than ours. So leave them out of it a little bit. They put the Europeans in there, and the European growth level is lower. Inflation's a little bit lower. So rates don't have to rise and could fall, and then you get a currency separation, a spread between the dollar and the euro, and that just contributes even more to the U.S. situation. And Japan is thinking about raising interest rates, and if they do that, it works on the other side a little bit, but it affects a lot of countries in Asia. And so there's a lot of moving parts here that all kind of depend on the whims of the guy in the White House, or soon to be in the White House.
Mike, I just want to get your take on the wildfires. Obviously, it's a tragedy that we don't immediately boil down to economics, but I do think of the broken window, that we're seeing in terms of 12,000 structures destroyed. Is that going to lead to inflation as everybody looks for, timber and copper and glass and all the things they need to rebuild?
It will lead to inflation in certain categories, certainly for building materials.
Labor.
And labor costs. And again, this ends up in the Trump White House as well. If you're deporting people, 40% of California construction workers, according to the National Mortgage Association, are undocumented aliens. And so if they all are getting thrown out of the country, then it's going to be really hard to find the labor to rebuild. If Trump puts tariffs on Canadian lumber, it's going to be the same situation. Then prices go up. Insurance companies are going to fight trying to give people enough money, and so it's just going to be a mess trying to rebuild all of this.
All right, I think it's going to be a mess either way, but hopefully we can keep those costs down. Michael McKee, International Politics and Policy, Economics and Policy, a reporter. Thanks so much for joining us. We're going to come back and talk to you about these falling markets.
listening to Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, we are not Alex Steele and Paul Sweeney. Matt Miller here with Emily Griffeo, doing our best to fill in for them. You know, I was watching the dollar this morning with a sense of awe. It continues to climb, and we're approaching the highs that we saw in 2022. I look at the Bloomberg Dollar Index, BBDXY Index. It's much better, in my opinion, than just the straight-up DXY.
It incorporates more currencies?
More currencies and trade-weighted. And so the DXY was put together in the 70s, and it's a fixed weight with kind of like the 1970s trade implications. And it doesn't even take into account any emerging markets. There's no peso, there's no Chinese yuan, there's no South Korean won in there. It's just 6 currencies. And in fact, when you look deeper into it, 57.6% of the weighting is the euro.
Wow.
That's
you
insane,
might as well just
right?
look at euro dollar.
Exactly.
I mean, why even
Whereas
bother?
the BBDXY, I'm not just saying this because I work here for Bloomberg, is 10 currencies and includes those emerging markets currencies. So much better.
It's telling us now that that dollar is stronger versus mostly everything.
Yeah, and the question is, what does that mean for stocks? Mike Wilson was out this morning with a note saying, look, the S&P gets only 30% of its revenue from international, but a lot of the companies on there that make, for example, tech hardware or housing, household goods or food and beverage, they're very exposed to international. So it does matter if Europe is in recession or the Chinese economy is slowing. Let's get away from that and get back to, I think, the big disaster that we're all watching so closely in California. How much of that is down to climate change? Leslie Kaufman joins us. Well, she's a climate reporter, so we know that she's going to say a lot of it. But she joins us to talk about why we should be concerned about climate change and will likely see more disasters like this. Leslie, what's the biggest climate issue? Because there's so many different angles that you could look at with this wildfire. Is the biggest issue the heat, the dry shrubbery, the lack of water? Is that the biggest problem?
Yes, I'll say yes to all of that. The biggest issue is that the climate there is fundamentally changing. Part of the problem is warmer oceans. And so what you would have had previously was a rainy season right now. That's not what you're seeing, of course. There hasn't been rain there since last March, or significant rains. And so every season is now fire season. That's particularly dangerous in the winter when the famous Santa Ana winds kick in. And that's exactly what we're seeing right now. There's no moisture and there's a lot of high wind. That is a disaster for fire.
How do you kind of square that with now trying to understand how this fire started? I'm basically wondering if is that even relevant if the climate just seems like a wildfire is going to be inevitable?
I think maybe for the specifics of how insurance is going to play out and trying to be smarter in the future, knowing how this fire started. But I'll take your greater point, which is I think these fires are going to be much more frequent. There's a great deal of evidence to suggest that. So then what you really have to think on a more global scale is, where do we want to build and how do we want to build back so that we're more fire resistant?
I had a listener write in earlier and ask about, the increase in natural disasters, especially in places like California or Florida, where insurers decreasingly want to take that risk. Are we seeing any kind of monies raised specifically for those states so that other states don't have to continue to help foot the bill?
Well, I'm not sure every state has to continue to foot the bill. Both California and Florida do have state-backed insurance plans of their own. That would be state money. when there are natural
But when they're insolvent, Leslie, we have to chip in, right? Because you're not
Yes,
going to
I
see
do.
the FAIR Plan cover this damage. It's going to be FEMA that jumps in with the bulk of the monies.
Well, the FAIR Plan is allowed to do assessments. The FAIR Plan is not allowed to go bankrupt. So what the FAIR Plan will do is it'll put an assessment on insurance companies, which will have impact nationwide. It will put an assessment on policyholders in California. But yes, I'll agree with the premise that FEMA will get involved, and they are much more involved in places like California and Florida than anywhere else. But increasingly, we're seeing natural disasters have real impact even beyond those places. I think all of us have to ask that question. I mean, a lot of people thought that, for instance, Asheville was climate safe. There were climate scientists living there. It turns out that was a disaster area in the last hurricane. Severe convective storms, which largely affect Dallas, for example, and the middle of the country, are also becoming huge cost centers. So I think climate change will affect all of us. Yes, Florida and California more than most.
It's so fascinating to read your piece and to see how the interaction of climate change and the insurance industry works out. I highly recommend people check out The Big Take on the Bloomberg. If you don't subscribe to it, you should. Just type NI Big Take, go on the terminal. And you can also see it, of course, on Bloomberg.com. Leslie Kaufman writes with Laura Rosenthal, Michelle Ma, and others on this story. LA wildfires push California insurance market to its limit. A tragedy, but also a fascinating read, so we appreciate your time. That's it for me and Emily and Paul and Alex. Balance of Power with Joe Matthew is next after this global news update.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. Los Angeles County officials have had to tell many people to wait as they look to survey the fire destruction in their neighborhoods. Sheriff Robert Luna.
People are saying, I just want to go look at my house and I want to see what's left. We know that, but we have people literally looking for the remains of your neighbors. Please be patient with us.
Strong winds could imperil other parts of the area that have been spared up to now, as we hear from CBS's Jonathan Vigliotti.
Authorities warn that the entire region is at risk. Millions have their bags packed as their fellow Angelenos cope with what's already been lost.
Devastating. It's devastating and numbing.
Firefighters have been pre-treating perimeters with retardant to buy critical time for when high winds ground aerial teams.
The fires are blamed for at least 24 deaths and the loss of more than 12,000 homes and businesses. CBS's Elise Preston is in the Altadena area.
You're seeing a lot of people really just open up their hearts and give. We were with a family yesterday, and some man came up to them and said, "Are you a victim? Were you impacted by the fires?" And the family said yes, and the man reached into his wallet, pulled out $100, and just gave it to the family.
Nearly 36 people have been arrested for looting since the fires began last week. Confirmation hearings begin tomorrow for Trump cabinet selections. CBS's Nancy Cordes says that includes Pentagon pick Pete Hegseth. An issue could be who sees an FBI background check that was done on him.
The FBI has looked into it. It has shared what it found with the top Democrat and the top Republican on the Armed Services Committee, which will be holding the hearing tomorrow. But there are other members of that committee who are saying, hey, I'd really like to see what's in that background report as well.
Officials say U.S. and Arab mediators made big progress overnight toward brokering a possible ceasefire in the Israel-Hamas war and the release of hostages held in Gaza, but a deal's not been reached yet. Denmark says it's ready to discuss the future of Greenland with President-elect Trump. CBS's Cammie McCormick.
Foreign Minister Rasmussen says Trump has a specific way of formulating requests, and he doesn't want a dispute over the issue. Therefore, his country is willing to have more detailed talks on Greenland.
The Americans have certain concerns about the security situation in the Arctic, which we share. Therefore, in close cooperation with Greenland, we are ready to continue talks with the incoming president.
He called Trump's concerns legitimate.
A magnitude 6.6 earthquake rattled southwestern Japan. No reports of serious damage. Wall Street, the Dow is up 11. NASDAQ is down more than 300. This is CBS News.
TradeMasters.com/free.
Tonight, the final game in the wild card round of the NFL playoffs.
The game moved to Arizona because of the wildfires in L.A. The Rams will be taking on the Vikings in an NFC wildcard game in Glendale tonight. It's been a unique week of preparations for Rams head coach Sean McVay, who knows Minnesota will be ready.
It's going to be a great challenge, but it's NFL playoff football, so we're excited about it.
Vikings head coach Kevin O'Connell is confident.
I think we've got the type of people and the type of environment here and team here that we're gonna accept the challenge and go compete like crazy.
The Vikings suffered just 3 losses in the regular season, 1 to the Rams back in October. Erica Herskowitz for CBS News.
Blue Origin's bid to launch a new rocket was scrubbed early this morning. The massive 320-foot rocket was supposed to launch before dawn at Cape Canaveral, Florida. Blue Origin is the company owned by Amazon founder Jeff Bezos. Steve Kathan, CBS News.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
The gears are turning on the transition. Welcome to the fastest show in politics as confirmation hearings begin this week and President Biden says farewell. But there is still no plan for legislating after a big weekend at Mar-a-Lago as we turn to the agenda today and specifically extending the Trump tax cuts. We spend time with an authority. Grover Norquist is with us from Americans for Tax Reform in a conversation you'll only hear on the fastest show in politics. We'll update the response to the wildfires. A lot of new information over the weekend. It does bring us back to Washington, and we'll prepare you for quite a week ahead with 13 Trump nominees up for hearings. Our political panel will have a lot more. Jeannie Shanzano and Chapin Fay are with us, and it's all after we look at Wall Street. Let's get to the Monday trade. A little bumpy so far. Cheers, Charlie Pellet in New York.
And I thank you very much, Joe Matthew. Indeed, quite a week ahead for equity markets. A lot of economic data, specifically on inflation. A lot of earnings news, specifically banks. That comes Wednesday. Right now, stocks are beginning the new week where they left the old week. Lower for the S&P right now. We've got the S&P down 0.7%, lower by 43 points. The Dow up 55, up 0.1%. NASDAQ down 1.5%. Tech stocks being hit particularly hard, including NVIDIA, Tesla, and Apple. 10-year 4.79% with a 2-year currently yielding 4.40%. Gold down $29 the ounce, down 1.1%. And West Texas Intermediate crude surging 3.1%, closing in on $79 a barrel. Bitcoin down 3.1%, 91,370 now on Bitcoin. Well, certainly a big question for financial markets is the incoming Trump administration and what it means for tariffs and deportations, and ultimately what it means for the U.S. economy. Veronica Clark is U.S. economist and research director at Citigroup Global Markets.
Yeah, there has been a lot of uncertainty, obviously, new administration. I don't think that uncertainty has really improved within the last month or two. So I think we would maybe be waiting still another couple months to know. In general, I mean, I do think a lot of the resilience of the economy the last couple years has been because we have had such substantial fiscal support, and that already is going to be fading for 2025.
Citigroup's Veronica Clark. Cleveland Cliffs said to be partnering with rival Nucor at a potential bid for United States Steel. That according to CNBC, citing unidentified sources. Cleveland Cliffs, they're up by, the shares are up by 4.7%. Nucor right now up 3.4%. U.S. Steel surging by 9.4%. Recapping, S&P 500 index down 37 now, a drop of 0.6%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues. Back we go to Washington. Once again, your host, Joe Matthew.
All right, Charlie Pellet, thank you so much. With his eyes on Wall Street, we're talking politics here in Washington. We will get back to Charlie a bit later on here. Not the most inspired session, but then again, we broke through some tough technical levels on Friday, and we'll keep tabs on this. It is a tough headline to wake up to today that the markets are back to where they were the day before the election. But maybe that's because we're waiting for news. Isn't that the point here? We're going to have a lot of news, by the way, not only in the next 24 hours here as lawmakers get back to town, but also from the White House as we cover both ends of Pennsylvania Avenue. It's the big farewell tour this week. It starts today, Joe Biden, 2 p.m. Eastern, a foreign policy address at the State Department. You'll, of course, be hearing about that here on Bloomberg. The big one, though, is Wednesday night. That's the actual farewell address as it's being billed by the White House. Prime time, Oval Office. They're treating it like it's the real thing. And then he'll continue at Department of Defense Thursday, and we'll speak to mayors on Friday. And, of course, we're all winding up to the big inauguration here. It's the 13th of January. We're almost there. Not that lawmakers are waiting. They were meeting with Donald Trump over the weekend on the patio at Mar-a-Lago. We talked to many of them leading up to these meetings last week. The different factions with different priorities, and still some questions when it comes to sequencing. By the way, you might be reassured to know the House Ways and Means Committee is actually holding its first hearing on making the Trump tax cuts permanent. So, as I said at the outset, the gears are turning. The question is exactly what will be the approach. That's why we wanted to talk to Grover Norquist. Of course, a longtime hand in this conversation. We're about to have it all over again with making the Trump tax cuts permanent. And Mr. Norquist is already talking about it from his perch at Americans for Tax Reform, roughly 2 blocks from where we sit here at Bloomberg. Welcome. It's good to see you here in Washington.
Absolutely.
You are writing in an op-ed that I caught in the Las Vegas Review-Journal, Unleashing Growth is the headline. And you're pretty blunt about this. I don't know if you're having conversations like these with lawmakers and what their reaction is, but you say 2 things very clearly off the top. To delay the tax cut is to kill the tax cut. But more than that, if Republicans delay the Trump tax cuts, you say they will lose the House. This window will be open for how long?
We really need to move and get something done in the next 4 months. And you need to date when the tax cut continuation begins to January 1st of this year. And we've had 2 times this has not worked. One was Trump's first presidency, which is why he and the Republicans who were here in 2017, that bill was discussed for a year. It didn't pass until December 22nd of 2017. It didn't take effect until January 1st of 2018. And then there was strong growth, very strong economic growth in 2019. But in 2018, the Republicans lost 40 House seats and control the House.
Because of the lagged effect in that whole process.
Well, if you're a small businessman or a large business and you're trying to decide, do we build another building? Do we build another factory? Do we hire 1 more person or 10 more people? Do we get a second truck? You know, just small decisions that add up. Well, if I don't know what's happening to expensing, I think I'll wait, because expensing has been weakening. And unless I know that it kicks in this year, January of 25, why would I make a decision? Why would I do it now instead of waiting until later? So the delay means any strengthening of the economy would show up much too late to help in the election in 2020.
It also comes to just certainty, right? Confidence. To your point, you're talking about business owners. We talk about that a lot here, too. It's Bloomberg. We also talk about people simply making investment decisions. This market's starting to teeter a little bit and was a rocket ship the day after the election. And some folks do point to uncertainty here when it comes to policy. You've got a debt ceiling matter hanging out there. You've got tax cuts. And we don't even have a funding mechanism for the government beyond March. So when lawmakers dig in here, the president will be in office in just days. What should be the sequence, and how do they get to this? You want to deal with border policy? You want to deal with tax cuts out of the gate? Is it one bill?
It will be one bill. And the path to getting to one bill, it was always obvious that it had to be one bill. 2 bills is much too confusing, and everyone would sit there wanting to jump onto bill number 1. Okay, whoever was put in number 2.
To criticize it, you mean, or to support it?
No, to move to say I want my project in bill 1, not bill 2.
Right.
And it'd be very confusing. We've been working, those groups that are supportive of continuing the tax cut, and the House and Senate leadership in Ways and Means and Finance, Jason Smith and Senator Crapo, they've been working together for a year on this stuff. So there's an awful lot of work done. And the president is having meetings now, not 3 months from now, with the House and Senate to move these things forward. There's a great consensus on everything should get done. There are a few issues where people could go 1 of 2 ways. Compromises have been put forward 7 months ago, 8 months ago, and are continuing.
What about the Thune argument? John Thune says, we want an early win. I can give you the border within days of Donald Trump taking office. It's going to take me a couple of months to write the tax legislation. Why don't we do this now, take the win, and then we'll come back around because we get 2 swings at reconciliation. Where's the problem there?
It's not a problem, but there's a better way to do it.
Yeah.
The president's going to put forward about 100 executive orders on day one. Many of those deal with the border. What went wrong at the border over the last 4 years was all executive orders. There was no change in the law between when very few people were coming in illegally to where millions were. Those were all decisions by the Biden administration, in effect, executive orders, decisions by the presidency and the border guard setup.
Border Patrol, sure.
Border Patrol system. Just undo them, okay? The president made the bad decision, or if you want border security, he made ones that made this border less secure. Trump just returns to the status quo.
So you don't even have to wait for legislation, is your point. Just let him do that. Start writing the tax bill.
And with the tax bill, you can find money in the Defense Department in various places to rebuild the wall. The wall is largely built. They just left the doors open in the last 4 years. So it doesn't take a lot of money to get that wall back up and going to where it was a pretty secure border as Trump left the White House. So these things can happen inside the tax bill. Sure. Because the tax bill will have spending cuts, but also some spending on defense and the border. That will happen very quickly, but the executive orders can happen immediately.
Spending time with Grover Norquist, who says it's one big bill, as Donald Trump would say, one big beautiful bill when it comes to border tax cuts and the rest of the congressional agenda. Scott Bessent's going to be on the Hill this week for his confirmation hearing.
Yes.
He has sat right in the chair you're in now to try to answer questions about how this cocktail of tariffs and tax cuts does not lead to higher deficits and potentially reinflation. You've spent your entire career trying to knock taxes lower, and I realize that that is your focus. Do you worry about that, seeing deficits increase, or you believe that revenues will rise enough by growth that somehow it offsets the loss of revenue from cuts?
The cost of government is total spending. And it's not the deficit. The deficit's the tip of the iceberg, okay? But what sinks the Titanic is the part of the iceberg under the water.
I understand.
Total government spending is what causes inflation, is what slows economic growth. So we want 2 things. We want spending to be as low as possible, and that means reforming entitlements. We were within 1 vote when in the last Trump presidency, when John McCain voted no on what would have block granted to the states Medicaid. That was a tremendous savings over a decade, simply by saying it will grow with inflation, but not faster than that. Huge savings to be made in block granting the welfare programs, not Social Security, not Medicare, but the welfare programs. And there's more than 100 various means-tested programs. Reagan block granted about 100 of them when he came in, a lot of smaller ones. So that's a huge savings. You can sell Fannie and Freddie. I mean, there are a number of things. One of the things they want to do with more energy, leasing more properties. There's a lot of cash to be earned that can pay for budget.
So you see some flexibility here. I just want to make sure we understand before we're done.
We're just about out of time.
Understood.
The most important way to keep the deficit down. That's true.
I read you. Will the deficit be lower after 4 years of Donald Trump than it is now?
I think so.
Yeah. Does it need to be?
It should be, and it can be. Both, we need more spending cuts and we need more growth.
Come talk to us when the debate gets real, Ways and Means, and we start having a real conversation about this bill. Grover Norquist with us here on Bloomberg. Americans for Tax Reform. Stay with us.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow advancing, the S&P, NASDAQ both declining right now. NVIDIA, Tesla leading the so-called Mag 7 lower. NASDAQ down 1.1% now, down 195 points. S&P lower by 0.4%, but the Dow holding on to a gain of 0.4%. 10-year 4.77% with a 2-year 4.39%. Balance of power continues now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet, thank you so much. Indeed, I'm Joe Matthew in Washington. Really glad you're with us today on Balance of Power, a fascinating and important conversation taking place here at Bloomberg as Joe Biden prepares to deliver his farewell address to the State Department. A short time from now, foreign policy address at 2 p.m. Eastern Time. We had an opportunity to hear from his national security advisor, Jake Sullivan, in conversation with Bloomberg's Jenny Leonard, talking first about the potential for a ceasefire in Israel. Listen.
First, I think the accumulating pressure on Hamas has been really considerable. They have had their military formations destroyed, their top leader taken out, their main proxy allies badly decimated, and their sponsor, Iran, weakened and distracted. So I think the pressure is building for Hamas to come to yes. I think Israel also has achieved a huge amount of its military objectives in Gaza, and therefore they are in a position to be able to say yes. So there is a distinct possibility that we can get this deal done this week before President Biden leaves office. But as you say, we've been here before, we've been close before, and haven't gotten across the finish line, so I can't make any promises or predictions. But just this morning, I was on the phone with Brett McGurk, who has been basically camped out in Doha. He's been there for more than a week, working the details within the framework President Biden set out last year. I spoke also this morning with the Qatari Prime Minister and with one of the key Israeli negotiators. And there is a general sense that this is moving in the right direction. The question now over the next short while is, can Hamas get to yes? Can we get to a final agreement? And then can we begin implementing in the coming days? It's there for the taking. So the question is now, can we all collectively seize the moment and make this happen?
Vice President-elect J.D. Vance said yesterday it will probably get done a day or two before you leave office. Do deadlines like this, specific deadlines, help or hurt the negotiations? And does rhetoric like the one employed by President-elect Donald Trump, is it useful to get Hamas to yes?
I think deadlines can serve two functions in a negotiation. When they're imposed by one party, frequently a deadline can make the other party think, hey, if I just wait till the last minute, they'll give me everything. If they're imposed by the mediators, if the Americans, the Qataris, the Egyptians all basically say, let's focus the mind and get this thing done, I think they can have a positive impact. And so I think the pressure building here towards the end of President Biden's term has been considerable, and that will help contribute to a positive outcome if we can generate that final yes from both sides. At the same time, this has been a circumstance in which President Biden gave direction shortly after the election to me, to Brett, and to others on our team. Work closely with the incoming team. Make sure we have a united front. We have a coordinated message. And we have tried to do that over the course of the last several weeks, as has the Trump team that's coming in. I think this is not a partisan issue. This is an American issue to get our hostages out and all of the hostages out, bring the fighting to an end, and surge humanitarian assistance into Gaza. And I think it's how a transition should operate, and it's consistent with President Biden's worldview about his stewardship of this country.
So you don't think any of the fiery rhetoric coming from the incoming team has actually changed anything at the negotiating table?
I have been struck by this phrase about all hell to pay or all hell will break loose, because if you're a Hamas fighter sitting in Gaza, I think it'd be fair to say that you have been seeing hell rain down on you for 14 months. The total smashing of Hamas battalions, the killing of the top three leaders, Sinwar, Deif, Issa, among others, and all of the other ways in which your entire broader network has been badly degraded and your sponsor has been so badly weakened. So the amount of firepower and pressure, military pressure brought to bear on Hamas has been pretty dramatic over the course of the past 14 months. I think it's the accumulated effect of that combined with this looming period of transition from one president to another that has created a circumstance where we could get to a deal.
You've spent the last year plus on the Middle East. Safe to say that's probably not the region that you thought coming in would be taking up a lot of your time. How much has that taken away from your priorities in the Indo-Pacific and other regions in the world, or has it?
Look, I really think one of the things history will look back on in the Biden administration and see quite clearly is that even as we've dealt with two substantial geopolitical crises, Russia's invasion of Ukraine and the outbreak of this conflict in the Middle East, beginning with Hamas's brutal massacre of Israelis on October 7th, that through all of that, we have never even for a second taken our eye off the ball with the long-term competition with China. And we have taken a series of actions in supporting alliances, protecting technology, investing in our sources of strength that have left us in a position at the end of 4 years where we have dramatically improved America's position in the long-term competition with China, and we've done so while managing the relationship so it doesn't tip over into conflict. So it doesn't make the headlines every day the way the Middle East and Ukraine does, but the record and the reality of the U.S.-China dynamic in 2025 compared with 2021, especially against the expectations in 2021, I think is quite a remarkable record that the president can take a great deal of pride in.
Let's talk about China for a second. You guys announced a new rule this morning on new limits on sales of advanced AI chips. Can you explain to us where did that rule originate? How did you get here? What's the backstory here?
So it originated from a basic reality, which is that the United States has to pursue two core objectives at once. The first objective is for the United States itself to maintain the lead when it comes to frontier AI technology, and that technology should be developed in the United States and our closest allies and not offshore to the rest of the world. And second, we want the world to run on an infrastructure of American technology. We want data centers around the world that are powering AI applications with American technology and not with Chinese technology or any other technology. So how do you achieve both of those things? That was the question presented to the key departments and agencies of the U.S. government. And so over the course of many months, we worked on a rule that could help us achieve both of those objectives. On the one hand, ensuring there were protections around the highest end compute capabilities, so we were building that out in America and our very closest allies. And on the other hand, making sure that we had predictable and clear rules for the export of high-end computing capabilities so that other countries could reap the benefits of American technology without it getting diverted to our competitors and adversaries. That's the rule that we produced. And it really stems from, I think, one of the most critical national security imperatives of the next generation, which is how we make AI work for us rather than against us. And America maintaining the lead in AI, as opposed to ceding it to China, is going to be decisive in making sure that it works for us. When we came into office in 2021, there were a lot of people who said, it's going to be China, not the US, who leads the world in AI. We are in the lead today. We're determined to protect, preserve, and extend that lead, and that's the hand we're going to pass off to the next administration.
Right, so you're on your way out. The deadline for this rule is very far in the future, so you punted that. What are the consequences if the Trump administration doesn't implement this rule?
So I would take issue with the word punt. What we did is set out a comment period of 120 days. And why did we do that? We did that because a rule of this significance needs comment from industry, from civil society, from other stakeholders, so that we make sure that we get this balance I've just described right. And so we are rigorous and systematic and thoughtful about having a process that allows that comment to come in, allows the new team to digest it, and then make whatever adjustments are necessary. Now, obviously, it's going to be up to them how they want to proceed. And they may have internal debates the same way we had internal debates about exactly how to calibrate the rule. I would expect nothing less. But I would be surprised sitting here today if after 120 days they looked at the landscape as we've looked at it and said, you know, we really don't need this at all. Let's move on to other things. Because the more you study this question, to me, the more critical it is that you have a rule of this kind, the details to be worked, to be able to secure the objectives that I laid out.
That's Jake Sullivan, President Biden's national security advisor, in conversation with Bloomberg's Jenny Leonard here a bit earlier today at Bloomberg, Washington, urging the Trump team to focus on cyber threats from China. And fascinating to hear him weigh in on the potential for a Gaza ceasefire as soon as this week. Of course, we're creeping up on a January 20th inaugural. Thanks for being with us today. On the Monday edition of Balance of Power, I'm Joe Matthew in Washington. Our eyes are ever on California right now, the latest from the wildfires. President Biden will be briefed a bit later on today, and we've, of course, learned a lot about this evolving story over the course of the weekend. Bloomberg's Tyler Kendall puts it all together for us now. Tyler, what do we know?
Yeah, hey, Joe. So President Biden is expected to convene his senior administration officials to get a full briefing on this later today. We know the president has already pledged that the federal government will cover 100% of costs for the first 6 months when it comes to recovery efforts there. Now, 500 troops have been deployed according to the Pentagon, and California Governor Gavin Newsom has confirmed that 9 states, as well as Canada and Mexico, have also sent and deployed resources on the ground. In terms of next steps, we do know that President-elect Trump has been invited to tour the devastation there. He's yet to publicly accept that invitation. However, he is publicly criticizing the response on the ground in California. Most recently, in a post on Truth Social over the weekend, he called California officials, quote, incompetent. Now, California's Governor Gavin Newsom was asked about this criticism on NBC's Meet the Press over the weekend, and I want you to take a listen to how he's responding to it.
He's the president-elect. I respect the office. Responding to Donald Trump's insults, we would spend another month. I'm very familiar with them. Every elected official that he disagrees with, very familiar with them.
Of course, President-elect Trump and Gavin Newsom have a long-standing political feud, but it is interesting to see him there defending his response. But I will add that as we watch sort of the LA politics of this all unfold, Gavin Newsom is demanding answers, saying that he has further questions for local officials and has actually already instructed the state to conduct an independent investigation, particularly into LA County's water supply, which has been a point of contention. And Joe, one lawmaker is actually taking it a step further. Newly minted Senator Adam Schiff of California is calling for this independent commission. He says he wants it to review California's response as a whole as this crisis unfolds.
Speaking of next steps, it'll be a funding debate, I suspect, over a supplemental request at some point here in Washington, right?
Right, exactly. There has been some concerns raised that President-elect Trump might withhold some aid once he gets into office. His Vice President-elect J.D. Vance tried to tamp down those concerns over the weekend when asked by Fox News. J.D. Vance said that Trump will be a president for all Americans, but that hasn't stopped sort of the rhetoric coming out and any potential concerns there. We will be watching for Congress and how they handle this. The number 2 Republican, Senator John Barrasso, as you know, said that funding could have strings attached.
There it is. Tyler Kendall, thank you so much. This is Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow higher, the S&P, NASDAQ, they are both declining right now. A sell-off in the stock market's most influential group is adding to Wall Street's malaise as investors await key inflation data after a massive recalibration of Fed rate cut wagers. S&P now down 29, a decline of 0.5%. Dow Industrials up 118, up by 0.3%. NASDAQ, though, down 208, a drop there of just about 1.1%. 10-year 4.78% with a 2-year at 4.38%. Spot gold now down 1.1%, $26.59 the ounce. West Texas Intermediate crude rallying 3%. WTI now $78.83 a barrel. And Bitcoin down 2.8%, 91,697 on Bitcoin. The new week brings official data on U.S. retail sales over the holidays. And with that story, here's Bloomberg's Vinny Del Giudice.
The Commerce Department will issue the report on retailing on Thursday. Bloomberg Economics foresees solid data on holiday sales, as well as another gain for the nation's auto dealers in anticipation of stiff new tariffs. In November, retail sales advanced for a third month, led by cars and trucks. Other retail sectors pointed to momentum heading into the holidays. Vinny Del Giudice, Bloomberg Radio.
Cleveland Cliffs is said to be partnering with rival Nucor in a potential bid for United States Steel. That, according to CNBC, citing unidentified sources. Right now, Cleveland Cliff shares, they're up 4.1%. Nucor up 3.2%. U.S. Steel is surging by 8.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. Balance of Power continues. Back we go to Washington. Once again, your host, and here he is, Joe Matthew.
All right, Charlie, thank you so much. Charlie Pellet, trying to take this sting out of the markets here on a Monday. Thank you, Charlie. We'll have more on Wall Street as we talk politics here on Balance of Power. I hope you had a great weekend. Lawmakers getting back to town here. We've got a lot to talk about with headlines flying, and we just got a new one. Remember Jack Smith? How quickly we forget. Do you know that he filed his resignation letter on Saturday? Just did it over the weekend. Jack Smith, the special counsel. Hardly knew you. But I will say his work endures here, or at least as of now, we can say his work will endure. The Department of Justice, based on a judge's ruling a short time ago, will be allowed to release Part 1, Volume 1 of Jack Smith's work here, the special counsel report on the 2020 election. Remembering, there were 2 federal cases that Jack Smith brought forth. One had to do with January 6th, election interference, trying to overturn the results of 2020. The other one was the classified documents case. Remember the picture of the bathroom at Mar-a-Lago with all the boxes, the Iranian battle plans, and so forth? The, dare I say, raid on Mar-a-Lago. They did have a search warrant for that. But that one stays sealed. Volume 1, with regard to 2020, if anyone even cares anymore, is going to be made public. This just a short time ago. Judge Cannon permitting Merrick Garland to release the special counsel report on Donald Trump's election-related opposition at the time, knowing, of course, that he has promised to pardon at least some of the January 6 rioters who are still living in jail. We have a lot to talk about today. I wanted to get into taxes, the congressional agenda, what the heck came out of the meetings at Mar-a-Lago, not to mention the baker's dozen of confirmation hearings we have set for this week. But this is a breaker, and we want to get to it with our panel right now. I'm glad to say Jeannie is with us on this Monday. Jeannie Shanzano, Senior Democracy Fellow with the Center for the Study of the Presidency and Congress, Democratic analyst. Chapin's back. Chapin Fay, Republican strategist, founder, Lighthouse Public Affairs. Great to see you both. Jeannie, is this just for posterity? Or what is the purpose of making the report public if the case is going nowhere?
Well, it is for posterity. And, you know, Americans may not care an awful lot in the moment, but I'll tell you who does care, and that is Donald Trump. I suspect we see that his team tries to appeal this to the Supreme Court. And of course, just last week, in terms of his sentencing, he was just one judge shy on that Supreme Court of getting that halted. So he may have a play there. You know, he feels very, very strongly that this is a witch hunt, that this is, you know, lawfare at his best. and he does not want this report released by Jack Smith, who we know he detests. And, you know, it's fascinating because the timing here, Pam Bondi is up for her nomination hearings starting Wednesday, and she's probably going to get some questions on this as well. So it's just fascinating timing, 7 days before the man is inaugurated.
It sure is. Chapin, I don't want to force you to be our legal analyst today, but Donald Trump have the power to stop this from being released. And so there's a pretty short window here for Merrick Garland to get this out. How do you feel about the fact this may be made public on the eve of his swearing in?
I think, you know, to underline something that Jeannie said, I think a lot of Americans, particularly right of center, believe that this was a witch hunt. And I think the quote unquote lawfare over the past, decade is one of the reasons that President Trump is entering his second term. And I would also say, you know, his legal argument makes sense for political reasons. Everything is weaponized, right? You're going to put out a report and one side is going to say how devastating it is, and the other side is going to say how it's exonerating, and it's not going to be helpful. And we are pretty sure that the establishment class and the media, who they're going to side with when it's public. So I think the president is rightly trying to keep this from ever seeing the light of day. And those who do think this is a witch hunt are only going to be solidified by whatever this report says, right? It's already been politicized.
Yeah.
So the only reason to get this report out now is to land some punches on the president before he's the president. So I think that's why you're seeing a little resistance to this idea.
Okay, sure. I have to ask you, though, I mean, if it is a witch hunt, then why not just put it out there and people able to realize that for themselves?
Sure, but I think in today's day and age, it's going to be immediately politicized one way or the other, right? And, you know, the president has you're going to love this. He's the underdog in this fight, right? You have every single media outlet in the country is going to talk about how devastating this report is before we read a word of it, right? We know that that's how it's going to be characterized. So I think the president is trying to keep that at bay, and I think he has every right to. And, you know, it may be legally untenable and he gets rejected and it becomes public. And then, you know, we're back where we started. But I do think that reports like this, it happened with the Mueller report. It happens all the time. You can't separate when you're talking about an elected official, but in particular the president, you cannot separate legal and political. They are both intertwined, and that's one of the problems when you don't have your I's dotted and your T's crossed when you're coming against the president.
Sure. No, I get it. I remember the Ken Starr report. Do you remember, Jeannie? They sold the Ken Starr report on a roll of toilet paper. You could go to Spencer Gifts and buy the damn thing. Look, Bill Clinton, I suspect, would agree with that take on things, but Jeannie, we also had some lawmakers talking about FBI agents intermingling, actually starting this, the mysterious white vans and so forth, considering the amount of conspiracy that has come to surround January 6th specifically. Is there not a service to releasing this report just to get to the truth?
I think it's absolutely important to release it. And I think the president has an uphill battle. I mean, let's face it, he already won half the battle by having Judge Cannon halt the release of the portion dealing with the documents. But in terms of January 6th, this is of historic national interest. We just lived through January 6, 2025. And the president is going to have a difficult time because, of course, transparency is and should be the watchword. It is the practice of the Justice Department to release these reports when the special counsel finishes his or her work. They did it in the case of Joe Biden, the sitting president, as it pertains to the documents case that he was not charged in, and they should do it again in this case. That said, I reiterate, we have a Supreme Court where Donald Trump is very likely to have success. And when Chapin is talking about lawfare, people on the other side are deeply concerned about things like Justice Alito having a phone call with Donald Trump just hours before he rules that his sentencing should be halted. These are the things of lawfare. It is of deep concern on both sides, but I think when you have that, the right thing to do is transparency, release the report. And so hopefully, in my mind, they do that. But of course, the president is 7 days. He wants to stop this, and he does have a lot of support on the Supreme Court.
Well, we have a lot to talk about beyond that. I suspect this Might have been something discussed on the patio at Mar-a-Lago this weekend, but I kind of doubt it. Maybe efforts to stop it. Chapin, lawmakers, it's like a big field trip over the weekend. It was kind of a slumber party at Mar-a-Lago, and we saw the photographs, knowing that each faction, if I can use that term, and I don't mean to be negative, but each group with varied interests, competing interests in some cases, of the Republican conference made way to Mar-a-Lago. Even the Republican Main Street Partnership, this wasn't all MAGA, but Republicans were on the ground to talk about the way forward. Trump tax cuts, border security, debt ceiling, and beyond. Maybe even emergency relief funding because of the wildfires here. I understand, Chapin, they dined on coconut shrimp and they drank Trump-branded water. But we still have, and we just spent time with Grover Norquist here a moment ago, still questions about how this is all going to happen. Will lawmakers start crafting one big beautiful bill, as Donald Trump says, or do they get the border off the table right off the bat and take some time to write a tax bill for this spring?
Well, you're right. We are in a very interesting time frame for American politics, which is just almost complete palace intrigue before President Trump takes the oath of office, right, as inaugurated. And you're right to use the word factions. Both parties have varying diverse parts to it, and each party is responsibility is for bringing as many people in the tent as possible. And what the way I would answer your question from the 30,000-foot level is, regardless of the attacks or the negatives on Donald Trump, he is in a unique position and has been talking about doing some of the things that the conservative movement in America have been talking about for decades, right? With his, take his cabinet appointment nominations, or who are soon to be nominated. They're disruptors. Right, they're not there to competently steward the Department of Education. They're there to radically alter it, to do things in a new way, or even dismantle it. And that is what the president is moving forward to do. And so I think so the rest of the party has to go and see how they can be a part of this, right? And you can either be on the team or not, because the president was elected with an agenda, and he's got quite a few allies in a Republican-controlled Congress and Supreme Court, right? What they're talking about is how to achieve not only Donald Trump's vision, but to the extent that it aligns with some of the things that the conservative movement has been trying to do in America for decades. I think that's where you're going to see people working together. But again, this is the political party. There's dozens of members of Congress and senators and agency heads that you have to corral to be able to do it. So will they do one big beautiful bill like President Trump wants? I think you're going to see closer to that this term than the first term, but you're still going to see people doing their own thing, trying to get their own, trying to get as much pork for their own districts and their own interests, right? People in California have wildly, vastly different, diverse interests than the people of New York right now, right? So the California delegation is there trying to do one thing, and the New York delegation is there trying to, for example, get a deal on salt. So you're going to be seeing all of this, particularly in the run-up to the inauguration. Then we switch over to what happens. We have to govern, and we have to see if these people are going to, toe the Trump line, or if he's going to have to keep them in line, or who he's going to lose, and so forth. So the story will change a little bit.
Well, Chapin said it out loud. He went there. Salt. I feel like producer James is going to get us in a little, like a bell rings whenever somebody says salt, and you get a prize. You get $1 each time, Jeannie. You're both coming at me from the New York, Connecticut, New Jersey perspective here, and I'm going to let everyone know we have a very important guest coming up in our next hour, Nicole Malliotakis, who was at Mar-a-Lago, right, Republican representative from New York. She was there for this conversation. And Jeannie, we'll just give them a sneak preview in our remaining moment. Maybe we increase the deduction, she says, remembering there are other states that maybe don't want to pay for salt where property taxes aren't as high as New York or Connecticut. Maybe we increase the deduction. Maybe it goes even higher if your state freezes or lowers the tax rate. Will there be incentives to states that do this, Jeannie, that actually gets this passed?
I think that is very possible, and I'm looking forward to Representative Malliotakis because she is one of the most connected on this issue in particular, and one of the most important voices, I think, in the Republican caucus in the House. So it's going to be fascinating to hear what she has to say about the trek down there and what they learned. And of course, we know that Lawler, also of New York, has a bill out there that's pending, and it raises the cap to $100,000 if you're single, $200,000 if you're married.
Yes,
that may be a bridge too far for many people, including people like Lindsey Graham, who came out and said, you know, I don't want to pay for New York spending. So it's going to be a fascinating conversation. But you know me, I love Salt Joe. Raise that.
I know you do. James has the idea, BOP branded salt shakers. Forget the t-shirts. We're going for it. Jeannie and Chapin are back in hour 2. Stay with us on Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Salty Republicans spend the weekend at Mar-a-Lago and find a new wrinkle. Welcome to the fastest show in politics as lawmakers return from Florida. With new hopes of lifting the SALT cap, I'm Joe Matthew alongside Kaylee Lyons in Washington. This is the Monday edition of Balance of Power. We're glad you're with us today on Bloomberg TV and radio. Kaylee, Donald Trump is asking lawmakers to come to consensus on this. Tell us what you guys want to do. And based on what we're hearing from our first guest this hour, it may involve incentives to some states that actually lower their property taxes. This is getting interesting.
Yeah, we know this is going to be difficult as you have to get to 218 votes in the House. And those who aren't from high tax states like New York and California may not like the idea as much of lifting the SALT cap as those who are from those blue states especially. And so it's all about trying to build consensus here. The question is going to be how long does that take? And ultimately, what is the form of that consensus? In what kind of bill? How large of a package? Will it be split off into something else and leave energy and immigration issues to be dealt with separately?
So we are still asking the same questions this Monday that we were last Monday, and I guess the one before that. Is it one big beautiful bill, as Donald Trump says? Is it two? We technically still don't know, but we are going to get into the fine print coming up here with Nicole Malliotakis, the Republican from New York, was on the patio for all of it.
Yeah, we're looking forward to that conversation, but we have to begin, as always, with a quick check on the markets. And Charlie Pellet has a look at the start of the trading week for us. Hey, Charlie.
Hi, thank you very much indeed. We have got the S&P 500 index moving lower right where we left off on Friday. The Dow is up 219, up by about 0.5%. Taking the Dow higher right now, United Healthcare, Caterpillar, and Amgen. S&P, as I mentioned, to put it all in context, down 0.2%. NASDAQ, though, where the real damage is being done, tech stocks selling off. We've got NASDAQ down 0.8%, down 154 points. 10-year yield, 4.77%, with a 2-year right now yielding 4.38%. Spot gold down $29 the ounce, down 1.1%. And West Texas Intermediate crude rallying 3.3%, $79.04 a barrel. Bitcoin now with a $92,000 handle. Bitcoin lower now by 2.4%. U.S. Steel shares rose after CNBC reported that Cleveland Cliffs and Nucor are considering a takeover bid for the iconic American steelmaker. Right now, we have got shares of U.S. Steel up 7.6%, Nucor up 3.6%, Cleveland Cliffs up 4.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much as we make our way from New York back down here to Washington, where many members of the House Republican Conference has made their way back after spending some time in Florida this weekend. The SALT Republicans, as we've mentioned, having an audience with the president-elect at Mar-a-Lago, but others as well, Joe, including members of, say, the House Freedom Caucus. Basically, groups of people within the conference who are going to have to try to find a way to compromise on issues like specifically tax policy.
Must have been quite a crowd. I mean, I always wonder, do they get their own cabin when they go when that many people are there? Because you had Main Street Partnership there too. Kaylee, and a lot of the questions that we've been asking have not been answered in terms of sequencing, and that's where we want to start with Zach Cohen, ahead of our conversation with Nicole Malliotakis, who's going to join us live from Capitol Hill in just a moment. Zach sets the baseline at Bloomberg Tax. Zach, you're a full-time SALT reporter. We want to know what's happening there, but also in the greater picture. Will the Republican leadership in the House pursue one big bill here, as we've been asking, or will it take longer to write this tax bill, including elements like SALT that are making things a bit more complicated than they were in 2017?
Right, because before they can figure out what or how they're going to change the tax code, they got to figure out when. There's been this ongoing debate where you have House Republicans mostly on one side, Senate Republicans on the other, talking about, do we include an extension of the 2017 tax cuts that were passed during the first Trump administration in our first reconciliation bill, along with things like border security and energy, military and defense spending, or do we punt on that issue and deal with it later in the year? Congress is known to really only work when it's under a deadline. And the deadline that they're keeping in mind is the end of this calendar year, when vast swaths of the 2017 Tax Cuts and Jobs Act do expire. And so there's some thought that we can pair that end-of-year deadline with some of the cuts that Elon Musk and Vivek Ramaswamy are putting together at DOGE as one way to offset the multi-trillion-dollar tax cut that would be extended over the next 10 years if Republicans do indeed have the votes in both the House and the Senate to do just that. They'll have to work through some of the trickier issues, like things like the state and local tax deduction, which I'm sure we'll talk about. Things like, do they make any changes to the corporate tax rate? What do they do about these expiring business provisions? These are all the things they're going to have to figure out in the next couple of months. And there's a difference of opinion on exactly how much time it would take to actually work out those details.
Well, so when it comes to salt specifically, Zach, which obviously right now is capped at $10,000, was there a firm discussion of numbers as we understand it at Mar-a-Lago, or was it just, you know, hey, making it clear that lawmakers from New York and California and a handful of other districts want to see this done, and Donald Trump was like, okay, yeah, let's think about it some more?
Yeah, I think Trump on a very regular basis has said he wants to try to lift the cap. I think eliminating it entirely is unlikely, just given how expensive that would be. But Trump, even during the presidential campaign, said we should do something about the SALT cap, which we should point out was included in the 2017 tax bill that he himself signed as a way to offset some of the other changes that they had made to the tax code to try to keep the price tag down. And so they came up with a couple of different ideas. The Trump economic advisors have talked about doubling the current SALT cap from $10,000 to $20,000. That's something that people like Congressman Mike Lawler and Nick Lota, both from New York, have said is insufficient to helping some of their constituents who, while making six figures, is certainly, as you know, in New York, is basically a middle-class lifestyle, given how expensive it is to live there. And so Lawler has said, let's boost it to $100,000 for single filers, $200,000 for married couples. That might be a bit of a stretch. So they may end up somewhere in the middle. I was talking to your next guest, Congresswoman Malliotakis, over the weekend. She said they talked about indexing the SALT cap, similar to how the standard deduction increases year over year without congressional action, to account for inflation. So there's a bunch of different ideas on the table. The question is, how do you get to 218 votes in the House and 51 votes in the Senate? Obviously, the math's a little harder in the House, especially when you have fiscal hawks who are trying to keep the price tag down. Even Lindsey Graham, the incoming chairman of the Budget Committee from South Carolina, was saying, I don't want to be subsidizing, you know, high tax states, places like New York, New Jersey, California. And so they're going to have to figure out some way to make both ends of the Republican conference work. And if they can't, go into Democrats and try to work out some bipartisan deal.
All right, Bloomberg Tax Congress reporter Zach Cohen, thank you so much for the reporting and also for the perfect tease ahead to our next guest, who is joining us now live from Capitol Hill. Republican Congresswoman Nicole Malliotakis of New York, who Zach just mentioned, is with us now here on Bloomberg TV and radio. Congresswoman, welcome back to Balance of Power. You've obviously made it back safely to Washington from Mar-a-Lago. I know you told Zach and have expressed that really this is about getting to 218 and whatever number it is on SALT that can get the requisite votes. But is there a floor and a ceiling, some kind of parameter around what that number actually realistically could look like you could share with us?
Yeah, look, I think your reporter got it just right. At the low end, it would be doubling it from 10 to 20. On the high end, it would be 100,000 for individual. I quite frankly think that is a little too high, particularly if we're looking to target middle-class families. I think it could be really more between the 20 and the 60 range. And this is just me knowing all the information I know as a member of Ways and Means and looking at the big picture, the big puzzle, knowing all the other pieces that need to fit into this equation. I think the idea here is to get some type of relief from the federal level for our constituents in New York, New Jersey, California, because their mayors and governors, quite frankly, are abusing them. They keep increasing their taxes. The property tax levy in New York City goes up year after year after year. It's the only municipality in the state that does not have a 2% cap. And that's unfortunate. This problem could obviously be resolved by our mayor and governor if they were just to freeze property taxes or lower the personal income tax rate as President Trump did in TCJA in 2017. But you have to remember there's the other pieces. You have the standard deduction that was doubled. You had the child tax credit that was doubled. You had the alternative minimum tax, which went away completely for the middle class, which was really crushing them, and it actually prevented them from benefiting from SALT. So we can't have the AMT come back as part of this. I've made that very clear. And so we're working with all these different pieces, not to mention the corporate stuff and the R&D tax credit and bonus depreciation and so many other pieces that are going to be part of this package.
Fascinating, Congresswoman, that you're also exploring some more creative ideas here. The reporting that we're reading coming out of the Mar-a-Lago conference quotes you to suggest maybe we increase the deduction. If your state freezes or lowers the tax rate, maybe the deduction goes even higher. Now, this is getting interesting, and I wonder what the reaction that you got was from your fellow lawmakers, from the president-elect, and maybe even from Democrats who you floated this to.
Well, I think my colleagues actually really like that idea, because part of the problem is we want to give relief, but if we give taxpayers money back with one hand and the governor and mayor come along and just raise taxes and take it with the other, that's a problem, and the taxpayer ends up losing at the end of the day. And so how do we incentivize, how do we change behavior, how do we hold the mayors and the governors that are treating taxpayers like ATMs accountable? And so we have to see if this can legally be done. That's the big question. Can we, let's say, double this deduction and then say maybe it goes up, it triples or quadruples if your state takes action to freeze, put a cap on property taxes and freeze income taxes or reduce them. You know, these are ideas that we're tossing around. I've also said maybe we want to limit the property tax portion of this deduction for primary residences, right? So that could actually target the people that truly need it. I think there's a lot of different ideas being floated around, and as a member of the Ways and Means Committee, we are obviously crunching the numbers, but we have to wait until the Budget Committee gives us the top line and the reconciliation instructions to really figure out how to put together this Rubik's Cube. And that's, you know, in the meantime, we're doing the math and trying to figure out what our options are, and we'll go from there.
Well, as we talk about the kind of structure of reconciliation, Congresswoman, was there consensus built at Mar-a-Lago this weekend around the one bill or two idea, or is this still a live debate? What messaging were you and your colleagues delivering to the president-elect, and what was he saying in return?
Well, I think the majority of our membership, certainly all the members of the House Ways and Means Committee, want to see one bill. And if you saw what happened in the last week of session, right, last year, that's the reason why we need one bill. It's hard to build consensus when you have such a slim majority. And the last time they did two reconciliation bills, it was under Newt Gingrich in 1997, and he had a much larger majority. You have to remember, TCJA, there were 13 no Republican votes. We don't have that luxury. We have one. We have a majority of one. So we have to build consensus. And I think the best way to do that is to put the different pieces that members care about together. The border, security measures, the energy production measures, those will satisfy some of the border states, the energy producing states, and you have the salt states get something with our salt relief. And overall, we support, as a conference, we support tax cuts, we support border security, we support American energy dominance. So let's just drill down and negotiate with each other on those finer details of each of these and get one bill passed so we get to the 218. If you kick tax to the end of the year in a separate package, I very much fear that it will expire and America will see $4 trillion in tax increases. We cannot afford to allow that to happen. It's too risky to do it later on in the year and not up front with this first package.
Well, Congresswoman, that's as long as we've ever gone in a conversation, I think, before you mentioned the border. So let's get to it. There is a thought out there, and Grover Norquist suggested it a little bit earlier in the broadcast, that Donald Trump's plans to issue some 100 executive orders, many of them aimed at the border, will give you breathing room to actually craft a single bill that would include border security and the tax issues that we're talking about. Is that the way you're looking at this? Let the president handle the border out of the gate. We'll back him up with legislation when it's done being written here and our debate concludes on the Hill.
Yeah, well, you know, the Senate has made the argument that we need to do two because we want to do the border wins early on. There's a way we can achieve that. First, as you say, the president can issue the executive orders, and he will do that to undo the policies of the Biden administration. But we've also passed legislation. Just the other day, we passed the Laken-Riley Act, which would require those who commit certain crimes to be detained and deported. And we're working through pieces of legislation that can get bipartisan support and the 60 votes needed in the Senate to get that out the door and put it on the president's desk for when he arrives next week. So I think we can score those border victories early, and then really when it comes to the reconciliation, it has to have a fiscal implication, right? So we can't necessarily do Laken-Riley Act in reconciliation, but we can increase border patrol, we can increase technology, we can put some things in there that would help with the deportation of criminals, and maybe adding judges to hear these asylum cases faster. So I think we can achieve both things here. And the bottom line is the president really just wants to get it done. I don't think he cares at the end of the day on whether it's 1 or 2. I think he just wants to get the policies done that will get America back on track. We've made the case that it should be 1 bill, and I think he sees the merit of 1 bill, as I said, considering what happened at the end of last year, where we had so much back and forth within our conference.
Well, and part of that saga at the end of last year, Congresswoman, was a question over whether the debt ceiling should be lifted or abolished entirely before Trump takes office. How is that interplaying in the conversations this weekend? When is that going to happen? In what legislation? And what could potentially be the trade-off? As we've seen reporting that it might be debt ceiling in exchange for wildfire relief in California.
Well, you know, interestingly enough, a lot of members believe that the debt limit piece of this is probably the most complicated, because that's where you see the most friction within our conference. There are some members who never voted to increase the debt limit. And we have to understand that the debt limit is money that's already been spent, that we're paying the bill. We don't want to prevent a default. So the responsible thing to do is to address that debt limit and do it before June. I think we're just going to look for any vehicle where we can get it. It could be with disaster aid. It could be within the reconciliation. It could be within the government funding mechanism, the federal budget. So we'll see what vehicle where we can get it, but it does need to be addressed before June. The sooner we can do it, the better. Let's get it out of the way, since it's the most contentious piece, and then get to the other real policy issues that the people have been waiting for, right? They want to get this economy back on track. They want to see the tax cuts extended and enhanced. They want to see our border secure and people who are here illegally committing crimes deported. And they want to see us lower those energy costs and produce more energy domestically.
Congresswoman, with regard to the border, while you're with us here in our remaining couple of moments, a warning from Immigrations and Custom Enforcement. Without emergency funding, they could be forced to release tens of thousands of immigrants, including some deemed to be public safety threats. We've talked a lot about the number of migrants being held in hotels, for instance, in places like New York City. Are you in touch with ICE and with Border Patrol on this matter? Would Congress be there to prevent the release of people dangerous to Americans?
Well, I have not heard about this, if there's an issue with the funding, because the funding is there for the next, to the end of March. I think what they need to do is actually find a way to shift the funding. So instead of housing individuals and transporting individuals into America's cities, we're actually deporting them and repatriating them. And if they are committing crimes and they don't have legitimate asylum claims. So I think that we met with Tom Homan about this. I mean, particularly New York City has been destroyed, by havoc being wreaked by illegal immigrants, gang members, drug traffickers, people who are bad, dangerous people. They've committed murder, they've committed robberies, they've committed all sorts of crimes in our city, and we need to get them out of our city and our country. And so the question really has been, how does the incoming administration legally, is there a way for them to shift some of the money that has actually been used to provide incentives and house these individuals and give them free services, to actually remove them from our country? And that's, I think, what the incoming administration is going to have to address when they get there next week.
From New York's 11th District, Nicole Malliotakis, great to see you, Congresswoman. We thank you giving us a little report from Mar-a-Lago there, Kaylee. Interesting to consider some of the options that lawmakers are facing, and we're going to have more with our political panel on that matter straight ahead. Jeannie Shanzano and Chapin Fay are Democrat and Republican, respectively, trying to find the way forward as lawmakers get back to town. This is Bloomberg.
It's 1:21 on Wall Street. We do check markets all day long here at Bloomberg. Drug maker Eli Lilly is asking the U.S. government to pause its forward march with drug price negotiations, potentially thwarting the Biden administration's plans to release a new list of drug targets before leaving office next week. Eli Lilly shares down now by 0.9%. The Dow higher, the S&P, NASDAQ, they are both lower. NVIDIA and Tesla are leading the so-called Mag 7 group lower as a fresh rise in bond yields weighs on riskier and high valuation sectors. Right now we have got the S&P down 15, down 0.3%. Dow Industrials up 210, up 0.5%, and NASDAQ down 170, a decline of 0.9%. The 10-year yield at 4.77%, the 2-year 4.39%. Gold down $27 the ounce, spot gold down 1%, 26.62 on the precious metal. West Texas Intermediate crude now up 3.5%, 79.22 a barrel, and Bitcoin at 91,620. Bitcoin down 2.9%. So again, recapping, the Dow higher, S&P, NASDAQ both lower. S&P right now trading down by 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. Balance of Power continues. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet with a look at the start of the trading week on this Monday. Thank you so much. Of course, next Monday will not be an ordinary debut of the trading week because it will be inauguration, which happens to fall on Martin Luther King Jr. Day this year, Joe. But that does mean we are in the final week here of the Biden administration before it becomes a Trump administration. And many of the individuals who intend to join that administration have been nominated by the president-elect are going to have a busy week leading up to the inauguration as they get ready to sit and be questioned, drilled by lawmakers in the Senate beginning tomorrow with the defense secretary nominee, Pete Hegseth.
Some probably more stressful than others, but quite a number here, Kaylee. We're all paying attention to the more dramatic potentials and some of the more bold faces here, but we're talking about 13 nominees before 11 different committees. This is going to be an extremely busy week. The one everyone's talking about, Pete Hegseth, Department of Defense, that's tomorrow. But much more where that came from. We'll see Pam Bondi and Marco Rubio on Wednesday, right? AG and State Department. John Ratcliffe, CIA, that same day. And on Thursday, we'll see the man tapped for Treasury, Scott Bessent. That's just the tip of the iceberg, though. We've got a lot more where these come from. I suspect we're going to hear a lot about Pete Hegseth tomorrow, no matter what happens, as long as Elizabeth Warren shows up.
Yeah, she has a long list of questions for him as he's faced scrutiny when it comes to a number of his views and, of course, past allegations of sexual assault that he denies. She has a long list of questions for Scott Bessent, though. Did you see that? Just
longer
released
than Pete Hegseth.
31-page. Yes. I mean, some of them are like questions, sub-bullet, second sub-bullet, triple sub-bullet. He's going to have a lot to answer, not just in the hearing, but probably in writing.
Gives you a chance to rehearse maybe some answers.
Yeah.
Let's get our panel together. They're going to be watching all of this, and I do wonder if any of these could take on a different course based on the Q&A that we see and hear this week. Jeannie Shanzano is with us, of course, our Democratic analyst, political science professor at Iona University and Bloomberg Politics contributor. She's joined by Republican analyst Chapin Fay, founder, Lighthouse Public Affairs. Great to have both of you with us. Chapin, Pete Hegseth surely knows that he's going to have some difficult questions. To Kaylee's point, Elizabeth Warren has already sent her 72 questions to him. We're going to be hearing from Kirsten Gillibrand, Joni Ernst. Who will you be watching tomorrow that could potentially change the course of this nomination?
Well, I'll be watching Pete Hegseth and how he handles it. This is their job and their prerogative to ask questions and tough questions of the president's nominees. And in today's, can it change course from what we think? Absolutely, in any second. If you watch, if you are steeped in, social media of congressional hearings like I am, you see all the time he gets served by these viral moments. AOC has many of them. Senator Hawley has a lot of them on the conservative side. Senator Kennedy, where they're sort of holding Biden administration folks to the feet to the fire. I think you'll see a lot of that in reverse once these hearings start, and it's up to the nominees to have been prepared. Well, it's up to the nominees and their teams, right, to be prepared and anticipate any difficult question and come up with legitimate, truthful answers to it. And if a nominee cannot do that, then that's a minimum threshold question, and if they can't do that, then they shouldn't be Trump's cabinet nominees. So we'll see all that play out. I think the vast majority of them are going to have tough questions, but ultimately nominated. I think President Trump was elected with a mandate, and he has, as was the House and Congress and the Senate. So as they do their jobs, rightly so, they should keep in mind that the president should get a little latitude on some of these nominees. As long as there's not huge issues in their background, they should be confirmed. But again, that's what the process is for. And if things come out and it changes the nature of the hearing, then so be it. That's on the nominees to be able to handle that.
Well, so Jeannie, obviously we have to see the hearing play out tomorrow, but it does seem that the feeling in Washington is that Hegseth's chances are significantly better than they were in those first weeks after his nomination was announced. And if he is able to get through, does that still leave a door open for Republicans to potentially tank another nominee like Tulsi Gabbard, for example, or maybe RFK Jr.?
It certainly does, but the reality is, I looked back today, Kayla, you know I love to do this, since George Bush Sr., there have only been 13 nominees who have not gotten through, and 12 of those were withdrawn. Only one, John Tower, was rejected. So historically, you make it to this hearing, unless you implode or, to Chapin's point, something comes out unexpected, you're going to make it through, and Republicans are going to see that through. So, you know, what I'm going to be watching, certainly the nominees themselves, Hegseth is our marquee person tomorrow, but also how Democrats perform and what they are setting up in terms of addressing the takeover of the Republicans of DC and how they're going to do a Trump 2.0 in a way that's different than they did in 2016, which was, quite frankly, not particularly useful for the party.
Well, so Jeannie, what will be Elizabeth Warren's mission tomorrow, Kirsten Gillibrand's mission? Are they trying to, on a singular level, trying to derail these nominations, or is it just about getting all the poison out, getting all the bad stuff out there so people can read about it?
You know, I think what they're going to do, Elizabeth Warren, you mentioned, you know, some of the Democrats we're going to be watching, Alyssa Slotkin, there's some others, Duckworth. All of these folks are going to be trying to do what Chuck Schumer talked about privately, which is to poke holes strategically in Republican governance so that going forward, when things aren't working well for Republicans, if that happens, they can point back and say, look it, we noted this. So I think that's what we're going to see. And again, it depends on what happens in the hearing. But, you know, somebody like Pete Hegseth, he's a smart guy. He's practicing. We know that. And he's good in front of both the camera and he's good at taking questions. So I find it hard to believe there's going to be a viral moment on his part, unless, of course, Democrats succeed and get somebody to testify against him, which so far we haven't gotten any inclination is going to happen.
Well, given our audience here on Bloomberg TV and radio, Chapin, I was particularly interested not just in Senator Warren's questions for Hegseth, but the laundry list of questions she has for the Treasury Secretary nominee, Scott Bessent, including this entire section on tariffs, including what tariffs do you intend to impose, on what timeline, what products, what is the goal of this? Is it raising revenue? Is it to pay for the tax cuts? Do you think Scott Bessent can actually answer any of these questions honestly when everybody is saying, oh, tariffs might just be a negotiating tactic for Donald Trump? No one really knows what he's actually going to pursue once in office.
I do think he can answer the questions. I think he's going to be prepared and he's going to be totally aligned with what the president wants to do. So if it is a negotiating tactic, right, you'll see, I think, him telegraphing some of that because he is in a tough position, as you rightly point out. But what I'd also like to say is I think what we're also going to see, and Jeannie mentioned this somewhat, this is also a time for Democrats to establish themselves as sort of the chief antagonizer, right, of the Democratic Party or the chief of the opposition. And so you're going to see, you know, you mentioned Senator Gillibrand and Senator Warren when it comes to the Treasury. That's something she cared very much about. You're going to see them auditioning for who's going to be the thorn in Trump's side, who the media is going to go to. How is Senator Schumer Schumer sort of running the opposition party, right? And you're going to see all of that. I think you're going to see that even more so. For Jean's point, I think I agree, right, that a lot of these nominees, including Hegseth, are going to get through. So you're going to see the Democrats actually auditioning, right, to steal the limelight or to suck the everything out of the room, suck the air out of the room. So I think that's what you're also going to see. But back to your original question about the Treasury Secretary, again, this is Senator Warren. This is what she cares about, and she has every right to ask tough questions, and she should. And I do think this is a good issue to put this nominee particularly through his paces, because it's something the general public, I don't think, has a really tight grasp on how tariffs work, why President Trump wants to use them in the way that he's using them, right? So I think there's a little confusion here that she can run into and get her, she's going to try and get her narrative to take hold through these hearings. So I do think you're going to see, pay attention to a lot of who's asking the questions and what questions are being asked.
All right, Chapin Fay and Jeannie Shanzano, our political panel today, helping us keep tabs of everything happening here in Washington. Much appreciated. But we also want to keep tabs on what's happening on the West Coast, with fires still raging in the Los Angeles area, having claimed already at least 24 lives and burned more than 12,000 buildings. We want to go now to David Baker, Bloomberg climate and energy reporter, who is live with us from San Francisco. David, obviously so much destruction already that we've tallied, and yet there's signs that weather circumstances could make the situation perhaps even worse this week.
Yeah, the winds are going to be picking up again. They died off a bit over the weekend, and that gave firefighters much needed chance to try to get some more containment on some of these fires. They were able to do that on some of the biggest ones burning, but the winds are expected to pick up again today and really start blowing again tomorrow, up to 70-mile-an-hour gusts. So that's the border of hurricane territory. And they are prepared for it. They know it's coming, but it's still going to be very challenging with these fires, possibly jumping some of the lines that they've been able to put up. Plus, they need to be on the lookout for more fires breaking out in this kind of weather.
Wow. So how do you sort of describe where we're at in this fight, David? It seemed like firefighters were making progress, but every time winds shift or increase, they're back to square one.
Not exactly back to square one, but I mean, it's a very tough battle for them. They do work very hard to get little bits, increments of containment, and they've managed to do a lot of that. They've put some homeowners out of harm's way over the weekend. The number of people under mandatory evacuations has actually fallen below 100,000 now. It's down in the low 90,000s. But yes, they have these changes in the wind direction, the weather, and suddenly they have a new fire front that opens up on something that's already burning. They have to deal with that. Suddenly they'll have new spot fires popping up here and there, and they have to deploy resources to that too. So it's going to be a very difficult couple of days. We're coming up on a week with these fires. We're not anywhere close to having them wrapped up or even halfway contained.
David, thank you so much. David Baker with us from San Francisco, climate energy reporter. The vistas, some of which we're seeing right now, Kaylee, on Bloomberg TV and on YouTube, are just apocalyptic. You don't believe some of the images. They look like they were created by AI. Yeah. But in fact, it is in the middle of a city. People are living and going about their business in some cases with this backdrop on a daily basis. It's remarkable.
Well, and the images just point to the sheer scale of this destruction. Yeah. Damage estimates now are north of $200 billion potentially, which raises a big question here in Washington as well as to what the recovery will look like and what role the federal government has in aiding in that. It's a story we'll continue to follow here on Bloomberg, and we still have much more ahead on Balance of Power, so stick with us on both TV and radio.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We are seeing a renewed dip buying. We have got the S&P 500 index lower, off session lows, and now little change, down by about 0.1%, down 7 points. The S&P at 58.19. The Dow up 255 for the Dow Jones Industrial Average, a gain now of 0.6%. Nasdaq, though, remains lower, down 143, down by 0.7%. Again, Nasdaq is off session lows. 10-year yield 4.77% with a 2-year currently yielding 4.38%. Gold down $28 the ounce, down 1%. West Texas Intermediate crude oil up 3.1%. WTI 78.92 a barrel. And Bitcoin now down 2.3%, just over $92,000. Bitcoin 92,084. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues. Back we go to Washington once again. Your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much. Here in Washington, we are marking the beginning of the end for the Biden administration. This is the final week that Joe Biden will spend in the Oval Office, and he is using it in part to try to cement his legacy through farewell addresses. There will be a big one on Wednesday evening, prime time, 8 p.m. Eastern, from the Oval Office. But before that, he'll be speaking actually at the top of the next hour, 2 p.m. Eastern time on this Monday, at the State Department, specifically on his foreign policy legacy, Joe. And certainly on that front, there is no shortage of events, of circumstances geopolitically over the last 4 years for him to talk about.
Well, that's for sure. It is hard to believe that a week from right now, we'll be watching a parade.
Yeah.
Imagine that.
A new president
Donald
will
Trump
have been sworn in.
will be the president of the United States. They'll be in their luncheon preparing to go back down to the other end of Pennsylvania Avenue to actually move into the White House. And what will happen, to your point, between now and then is going to be remarkable. We'll go through this all together. There are some things we cannot predict. We know there's one they're hoping for in this White House, and that's a ceasefire in Gaza. Of course, Donald Trump has visions potentially in his mind as well as they in tandem try to negotiate a ceasefire to see the release of hostages upon his swearing in.
Yeah, as Donald Trump has maintained that he would like to see the hostages have been released by Inauguration Day, or has promised pretty serious consequences. So it's kind of the story of an outgoing and incoming president trying at the same time to achieve the same means on the same timeline.
With shades of Carter and Reagan. Spent some time earlier in the Bureau today listening to Jake Sullivan, the president's national security advisor. He sat down in conversation with Bloomberg's Jenny Leonard to talk about this very matter. Here's what he said.
I think the pressure is building for Hamas to come to yes. I think Israel also has achieved a huge amount of its military objectives in Gaza, and therefore they are in a position to be able to say yes. So there is a distinct possibility that we can get this deal done this week before President Biden leaves office. But as you say, we've been here before, we've been close before, and haven't gotten across the finish line. So I can't make any promises or predictions. But just this morning, I was on the phone with Brett McGurk, who has been basically camped out in Doha. He's been there for more than a week, working the details within the framework President Biden set out last year. I spoke also this morning with the Qatari Prime Minister and with one of the key Israeli negotiators. And there is a general sense that this is moving in the right direction. The question now over the next short while is, can Hamas get to yes? Can we get to a final agreement? And then can we begin implementing in the coming days? It's there for the taking. So the question is now, can we all collectively seize the moment and make this happen?
Vice President-elect J.D. Vance said yesterday it will probably get done a day or two before you leave office. Do deadlines like this, specific deadlines, help or hurt the negotiations? And does rhetoric like the one employed by President-elect Donald Trump, is it useful to get Hamas to yes?
I think deadlines can serve two functions in a negotiation. When they're imposed by one party, frequently a deadline can make the other party think, hey, if I just wait till the last minute, they'll give me everything. If they're imposed by the mediators, if the Americans, the Qataris, the Egyptians all basically say, let's focus the mind and get this thing done, I think they can have a positive impact. And so I think the pressure building here towards the end of President Biden's term has been considerable, and that will help contribute to a positive outcome if we can generate that final yes from both sides. At the same time, this has been a circumstance in which President Biden gave direction shortly after the election to me, to Brett, and to others on our team, work closely with the incoming team. Make sure we have a united front. We have a coordinated message. And we have tried to do that over the course of the last several weeks, as has the Trump team that's coming in. I think this is not a partisan issue. This is an American issue to get our hostages out and all of the hostages out, bring the fighting to an end, and surge humanitarian assistance into Gaza. And I think it's how a transition should operate, and it's consistent with President Biden's worldview about his stewardship of this country.
U.S. National Security Advisor Jake Sullivan in conversation with Bloomberg's Jenny Leonard in our offices here in Washington, D.C. earlier today. Again, there is a week left to go of this current administration before inauguration, and we'll see if a deal can be reached over the course of the next, I guess, less than 7 days. We want to extend this conversation further as we await the foreign policy speech of President Biden at the State Department just a few minutes from now, and turn to retired four-star General Wesley Clark, former Supreme Allied Commander for Europe, and of course was a presidential candidate in 2004. General, thank you so much for being here on Balance of Power. When we consider the Middle East specifically and the kind of bookending of the Biden administration with an Afghanistan withdrawal in the summer of 2021, now at the end, a war in Gaza that has been going on for well more than a year, how much would being able to secure the release of the hostages to reach this agreement that has long been fought for right at the end of the administration define the president's legacy when it comes to the Middle East?
Well, I think the president, if he can get the hostages released, I think that will be a great legacy for President Biden to leave. But I don't think there's any assurance that you're going to get the hostages released, and we don't know how many are still alive. The problem is that from the beginning, from the October 7th attack on, it's always been the Hamas strategy to draw Israel in, to implicate the United States in this, and to use Israel's military force against civilians, because Hamas is using them as human shields, as moral shields, as a way of protecting its own path forward. And Hamas sought to involve Iran and Hezbollah in its conflict. It's failed, but there's still diehards in Hamas. So who's in charge, and will they give in? I hope they do.
Is it a help or a hindrance to have two parallel lines of communication underway right now, General? This White House is clearly engaged and has been for months with regard to a ceasefire, but having Mar-a-Lago involved as well means what?
Well, it's confusing. It's difficult. It depends really on what's going on the inside that we don't have any access to. If there's really teamwork between the two groups, then that's fine. But in previous decades, there hasn't been that teamwork. There's been jostling. There's been partisan one-upsmanship. There's been efforts to stall things and get credit for it and so forth from transitions of administrations. And so we just don't know how that's really going to work out here. I'm sure if the hostages are released tomorrow, President Biden will be very proud of it. But if they're released 2 weeks from now, President Trump will certainly take credit for it, and yet surely some of that credit belongs to President Biden. So there'll be some jostling going on, even if they're working in the closest cooperation.
Well, so when we consider what we've already seen, General, which of course has been the destruction of vast parts of Gaza, obviously of Lebanon, as well as that front opened up between Israel and Hezbollah. We have seen an overturning of Syrian dictator Bashar al-Assad's regime and still have questions about what the future will look like there. Can you just define the situation in the Middle East that Donald Trump will be inheriting and what decisions he is going to have to make in fairly short order after taking the oath of office that could define the way the region moves forward in the U.S.'s relationship with it?
Situation in the Middle East is really best defined by the weakness of Iran. For the first time in decades, Iran is substantially weakened by the failure of Hezbollah and also by the Israeli airstrikes and the fact that the Russians haven't really come in and replaced all those air defenses yet, so far as we know. Iran's also weakened because its ballistic missiles and so forth really didn't have that much impact, even when they launched them in the hundreds. And so Iran is weak. This is the moment to change the balance of power in the Middle East. Lebanon needs to be freed from the grip of Hezbollah. Syria needs to become an independent country. Hopefully HTS is not going to revert to a pure Islamist state that's hostile to its neighbors. Turkey is reaching out, and something has to be done with respect to our Kurdish allies and the 50,000 or so terrorists and family members that are being held in prisons and camps by the Syrian Democratic Forces. If terrorists are released, we're going to have a huge problem, just like what happened in Afghanistan when we released the Taliban prisoners as part of the peace deal that was negotiated by President Trump. So I think President Trump has an historic opportunity. The window is open to go to Iran with an ultimatum, really, is cough up the nuclear stuff, do it now, or face the consequences. The Iranian population is restive. They're ready for a change in regime by all accounts. We don't know what that would bring exactly. And the Ayatollahs and the mullahs there are in an historically weak position. So this is the overriding element that President Trump has to look at in dealing with the Middle East. Syria, Lebanon, Gaza, they're actually secondary to getting to the source of the trouble, which is Iran.
General Clark, the individuals Donald Trump has tapped to make up his national security team will begin their confirmation hearings tomorrow by way of Pete Hegseth, of course, his nominee to be the next Secretary of Defense. And I'm sure you're aware of the conversation and the concerns that many senators, many Democratic senators, it seems, have over his nomination. He has said, with regard to women serving in combat, that he is, in fact, open to this idea and supports women who are serving in uniform. He has also pledged to stop drinking alcohol if confirmed to be the next Secretary of Defense. With what you know about that job, which is more than most Americans, I wonder if that should be enough to win the support of senators.
You know, he's served in uniform. He knows something about the Army. He's been there. He's been on deployments. He's been in the National Guard. He's got a lot of characteristics. He's a Princeton graduate. He's not a dumb guy. He's got a lot of talent. So, and he's loyal to President Trump or President-elect Trump. And so all these things weigh in his favor. The senators are going to have to decide whether the other elements in his background are disqualifying in some way. But I think on balance, it always goes to the president-elect. He gets his choice. So I think it's going to be difficult, no matter what some Democratic senators say about him and his attitudes, what he's written in books and so forth. I think it's going to be difficult to deny him the nomination. And I would expect that when he gets in and he's confronted with the enormities of that job, the responsibilities, the details that have to be worked, the teamwork that's required in there, that a lot of them, the statements he made and so forth are going to just go by the board. He's going to be a Secretary of Defense. He's got important responsibilities. Got to focus on that job.
General, we just have about 90 seconds left here, but I would imagine when the president speaks a few minutes from now, he will be touching on NATO expanding under his watch, as well as the support his administration has provided for Ukraine. But a week from now, when Donald Trump takes office, can NATO and Ukraine be as confident the U.S. will still be there to support?
I don't think Ukraine is confident yet, and they don't know what kind of support the United States will provide. But I will say this, the United States has provided good support, but not exclusive support to Ukraine. And the European allies have actually provided more military hardware than the United States. And the money that's gone in, it's gone to replenish our own arsenals. We could have done a lot more. In my view, we should have done a lot more. And I hope the Trump administration will understand that if you want to cut a good deal to preserve and protect Ukraine in a sustainable way, you have to continue to support it. You have to have a strong front, and that means some connection to NATO for security guarantees for Ukraine.
General, it's great to have you back. Wesley Clark, former Supreme Allied Commander for Europe. Of course, General Wesley Clark on Bloomberg TV and radio. I'm Joe Matthew alongside Kaylee Lyons in Washington. We'll be keeping tabs on what Joe Biden says in his address to the State Department coming up shortly with what will essentially be a series of farewell addresses culminating with the big one, the Oval Office address in prime time to the American public on Wednesday. one that will bring you here on Bloomberg TV and radio. And Kaylee, I'll meet you back at 5 p.m. Eastern Time for the late edition of Balance of Power.
Of course, we'll be joined by the Canadian ambassador to the U.S. as we consider foreign policy. We got to look north as to what could be coming in this incoming Trump administration. So that's ahead, and we'll have much more on Bloomberg Business Week right after this on Bloomberg TV and radio.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Tim Stenovec on Bloomberg Radio.
And a very good Monday afternoon, everybody, live on radio, TV, YouTube, Bloomberg Originals. This is Bloomberg Business Week for this Monday, January 13th. I'm Carol Massar along with Tim Stenovec. Let's get to the setup on this Monday. And you've got Mag 7 stocks selling off ahead of what is a very big week full of some important inflation prints, some economic news, and also we get those big banks, Tim, kicking off earnings for us.
Yeah, also a story just crossing Honeywell, said to plan a breakup under pressure from activist Elliott Investment Management. We'll continue to bring you the latest on that story and more throughout our program. We got a lot Carol, top of mind this hour. We got a busy hour coming up.
I mean, the read-in this morning was just chock full of so many different stories on so many different fronts. That is, though, kind of our setup on this Monday. We are going to have highlights from the J.P. Morgan Healthcare Conference, its annual conference and its 43rd installment, 43rd year. We're going to check in with the CEO of Takeda Pharmaceutical. There's a lot going on in the pharma space. Some of it involves AI. We're going to talk about that kind of a little bit later on Business Week, but we're going to tackle that in just a moment.
And south of there, LA wildfires continue to burn. We're going to bring you the latest from the LA wildfires, check in with some of the folks out there in Southern California.
Yeah, that has the cost, as we know, the fire, in terms of the impact, the financial impact, obviously the personal impact, but we continue to assess certainly what it will ultimately cost to deal with the aftermath of those fires. We're also going to get into a great read by our Mark Gurman, his Power On newsletter, and what is expected to be Apple's push in 2025. There's a lot going on. A lot of it has to do with the iPhone. A lot of it has to do with what Apple wants to do in our homes. So we're going to hear from Mark on the latest when it comes to the world's biggest market cap company that's out there.
Carol, I might also ask him a little bit about Sonos and what's going on at Sonos with Patrick Spence out. And you got Tom Conrad coming in. He's a longtime music executive, was one of the founders of Pandora. He was at Snap in recent years. He's had executive positions throughout his career. He's interim CEO there. So we're going to get the latest from Mark on all things tech.
And speaking of the latest, NVIDIA's latest move as another layer of chip restrictions come down. So all of that to come for you on this Monday. We begin, though, in the healthcare space. Bloomberg's been talking about a deal in the healthcare space, J&J acquiring Intracellular Therapies. It's a company focused on treatments for central nervous system disorders. That's about a $14.6 billion deal. Healthcare is top of mind for so many different conversations, which is so timely considering right now that J.P. Morgan Healthcare Conference is underway in San Francisco. It's the 43rd annual. With that in mind, let's toss it over to one of the hosts of Bloomberg Open Interest on Bloomberg TV, Katie Greifeld. She's there with a special guest. Katie.
All right, thank you, Carol. I am sitting by here with Takeda Pharmaceutical CEO Christoph Weber. Christoph, it's great to see you.
Good morning. Great to be here. Thank you for the invitation.
So let's talk about your cost-cutting program. You announced it last year. It involved, among other things, laying off or transferring about 1,200 employees. Where do you stand now in that program? How close are you to completion?
So there are different parts of the programs. Some are reorganization, and most has been done so far. But there are other parts which will take longer. And one part, for example, is about data and technology and AI and how we leverage that. That's a multi-year program. So there are different stages, progressing at different pace.
So still progress to make there. I want to talk a little bit about sales because it caught my eye that back in December you divested your generic drug joint venture that you have with Teva. Should we expect more sales along those sorts of lines?
Well, in the last few years, we have refocused the entire business to innovative medicines. So we used to be in the generic business. We used to be in the OTC business. We divested those. So we are now entirely focused on innovative medicines. So that's really to finish that refocus. So not many divestment to come anymore. Yeah.
So when folks say innovation, they often mean that they're also looking at buying things. And we're sitting here at the J.P. Morgan Healthcare Conference. There have been a lot of deals announced, and there's just a lot of optimism about the M&A landscape under a second Trump administration. How are you thinking about your M&A strategy right now?
So we are entirely focused on our pipeline and having a very innovative pipeline. We are actually at a very exciting stage right now because we have 6 new medicines in late stage in phase 3. And so, for example, this year we'll have 3 phase 3 readout. This pipeline value is between 10 and 20 billion US dollars, so it's very material for us. Now, if you look at these 6 late stages, some came from business development, from in-licensing. So that has been our focus for now many years, which is to enrich our pipeline through very targeted in-licensing and business development.
Interesting. And let's talk a little bit more about that pipeline in the context, of course, of your upcoming patent expiries. You have Vyvanse, that's your ADH drug. That is expected to lose its exclusivity in the coming months and years. And I'm wondering, what is in the pipeline that can potentially offset the loss of that patent?
So Vyvanse lost actually its patent 2 years ago. So we are at the end of the genericization. So that's behind us. Between now and 2031, our generic exposure is very limited. We have 10 growth and launch products which are driving our growth drivers. So that we will grow with this 10 products between now and 2031. And our pipeline that we will launch starting in 2026 will be our next growth drivers, because we'll have a new generic exposure starting in 2031. So that's the stage, that's the phase that we are seeing for the future.
Okay, I appreciate the clarification there. Let's talk, though, about upcoming competition. You have a best-selling ulcerative colitis drug as well. Of course, competition there is expected to come in the next few years. How do you plan to navigate that? I'm sure this is a situation you've been in before.
Yeah, this is our leading medicines, very important for IBD patients. This is the best treatment today, the leading one. A lot of competition, but so far no treatment have had a higher efficacy and safety than this product. So we are very confident that it will continue to grow until it is facing biosimilars, probably in 2031-32. Yeah.
And I know when it comes to your pipeline, two areas that you're working on, of course, psoriasis, narcolepsy, and I want to focus in on psoriasis because there's a lot of psoriasis drugs on the market right now. You have a phase 3 drug in trials right now. What differentiates that versus some of the competition that's out there?
Well, we believe it could be the best oral treatment on the market to treat psoriasis. So right now, biologics, injectable are the efficacy standards. We believe that this oral treatment could have an unmatched efficacy for oral treatment. So it could really help the use of more oral treatment, which are more convenient for patients. So we are very enthusiastic about it. It's in phase 3. We'll have the readout in 2025. And so very excited.
Can you give me a little more color on when in 2025?
We'll see when the trial, it's difficult to predict depending on the trial enrollment, but let's say this calendar year 2025.
Okay, so we'll put a pin in that one.
Yeah.
But let's talk about other big themes, of course, at this conference. A lot of focus on deal making, a lot of focus on the obesity market, as you would expect. What are you specifically doing in the obesity market? How are you thinking about it?
So we are focusing on the GI, oncology, and neuroscience. So we are not focusing on obesity. So this is something that we are not interested in. Neuroscience, oncology, and GI and inflammation is quite vast. So there is a lot to do in this space. Yeah.
Something I always wonder, do you feel any sense of FOMO when it comes to the obesity market, fear of missing out, or are you just really focused on sticking to your lane here?
Well, of course, it's a great story. There is a huge unmet medical need. This market has developed very, very fast. But it's becoming extremely competitive very rapidly. You need to have a know-how to compete in that market. We don't have this know-how because we focus on neuroscience, oncology, and GI. And, you know, we take some big risks with potential big rewards in other diseases like Alzheimer's, for example.
Yeah, talk about big risk, big reward. Alzheimer's obviously fits that bill. I do want to talk a little bit about the political landscape. Of course, we're about a week away from Donald Trump's inauguration. And you think about your company in particular. You're based in Japan. The U.S. is your biggest market, though, when it comes to revenue. How worried are you about potential tariffs and just the geopolitical risk that might arise there?
Well, we'll see what happens. I hope that healthcare or pharmaceutical will remain protected from geopolitical tension or tariff, because innovation in healthcare, in pharma, come from many different countries, many different biotechs. So if you start to have geopolitical tension or tariff or no access, it means that some medicines won't have access and patients will suffer. So my plea is that pharmaceutical healthcare should stay away from any geopolitical tension or tariff.
Well, we should find out soon enough there. And I have about time for one question left with you. And I want to talk about what you're doing in China, because you've been aggressively partnering with Chinese biotech companies. And you think about the U.S. and the Chinese relationship, a lot of concern, a lot of questions over what that will look like under the second Trump administration. Could that give you any pause when it comes to that strategy?
So there is more innovation in China. It's still limited compared to the US, and we should actually remember that 80% of the new medicines in the world come from the US, so this is something very important. We are growing very fast in China, but because of the geopolitical risk, we have been very careful not to have any dependency on China. So in case there is a bigger tension, we will not be impacted. So that has been our strategy. So we are quite de-risked when it comes to the geopolitical risk US-China.
All right, well, that is a really interesting point to leave it on. Christophe, really appreciate the time today. I know it's a busy conference.
Thank you very much. No.
Carol and Tim, back to you.
All right, so appreciate it. Katie Greifeld, of course, one of the hosts of Bloomberg Open Interest on Bloomberg Television, and so much more. There with the CEO of Takeda Pharmaceutical. Tim, we're going to stay on the West Coast. We want to get an update on the wildfires out in Los Angeles.
Yeah, LA and the rest of Southern California facing a second week of fierce winds that are turning wildfires into blowtorches, putting lives at risk, destroying homes, businesses, and cultural landmarks. Here with an update, we bring in Will Wade. He's power and renewable energy editor at Bloomberg News. He joins us here in the Bloomberg. I know you spent a good portion of the weekend keeping in touch with them. Just give us your personal story, your personal connection to the area.
Yeah, certainly. This one's personal for me. I grew up partly in Pasadena. I remember, in the fall, the Santa Ana winds would come in. They blow from the east. And there were plenty of times we'd watch those hills go up in fire, and the air would be smoky, but it's nothing compared to what we're seeing now. These fires are intense, and it's hitting close to home. My aunt lives in North Pasadena. Her house is about 2 blocks from the fire front lines. It's the Eaton fire, and she was evacuated a week ago, last Tuesday night. She was allowed home briefly over the weekend to pick up some necessities. She said air is bad, soot everywhere. We're just hoping that she gets to keep her house because so many people around there have lost everything.
Yeah, no doubt about it. I was blown away by some of the footage and just, the winds as you talk to, picking up the embers that are just being spread like crazy. And you get an understanding of why it was so difficult to fight this fire, contain this fire, and prevent the spread. Where are we in terms of containment and spread at this point?
We're not very far. The Palisades fire, that's the biggest one. That's 14% contained. The Eaton fire in Pasadena, the one threatening my aunt's house, that's 33% contained. I looked it up. What that means is the firefighters have basically built a battle line around 30% of the fire. The rest of it is burning uncontrolled in other faces. So plenty of room for that thing to grow. And so far, they're just huge. Together, all these fires in LA have burned about 40,000 acres, which, and I looked this one up too. You know how big that is? It's a little bit bigger than Staten Island.
Wow.
So it's massive.
It's massive.
It's massive.
Yeah.
The difference when you hear about that acreage, though, is oftentimes in the past when we're talking about wildfires out west, we talk about acreage. These are areas that are uninhabited. They don't have, they're not entire neighborhoods that have been leveled. They're not places where people are. That's what's different about this wildfire.
Yeah, it's going through homes. It's going through communities.
These wildfires, I should say.
Yeah, there's several of them. There's 3 main ones now. There were, I think, as many as 6 over the past week now. And it's just decimating entire communities, really wealthy communities too. Some of these houses are multi-million-dollar homes.
I talked to my mom. She's on the central coast of California yesterday. She said not a cloud in the sky in the forecast. We're not seeing rain for quite a while. We know the Santa Ana winds south of where she is and where my dad is a huge issue this week. What else do we know about the weather and what it'll do for the firefighters on the front lines?
Yeah, no rain forecast anytime soon. We got a little break on the winds at the end of last week, but they've come right back up again. We're seeing gusts of like 70, 75 miles an hour. That's a lot. It wasn't as much as at the peak last week when I heard we had some gusts as high as 90 miles an hour. But all of these winds, they just fan the flames. They make it hard for the firefighters to do their job, and they can blow sparks. That's why the fires keep spreading.
We talk so much about, obviously, the dry conditions caused by climate change that have made it so difficult for these fires to be fought and just makes it ripe for their spread. Having said that, we are also curious about what caused it. And I know it's early and on the game. Are we hearing anything? I know I've seen people come up to me and say, well, they're hearing it's arson, or they're hearing it's, power companies or whatever. My read-in is that they're still not sure. What do we know on that front?
It's still too soon to tell. We don't know anything, but we do know that in the past, power lines have been a significant culprit in wildfires out west. PG&E, California's biggest utility, went bankrupt several years ago. Their power lines were tied to multiple wildfires, and it's a real thing. What we've seen in the past few years is when it gets really windy, the power companies will cut power to entire neighborhoods ahead of the winds just so this doesn't happen. So we're still trying to track what lines were live at the time, which lines weren't live at the time. We know the big utility down there, Southern California, Edison, has been told, preserve evidence if you see anything. But so far, there's no sign that anything has been found. But that's because it's so early in the process. We're going to be looking at this really carefully.
Well, I just keep thinking about rebuilding. And this is an area that's very densely populated. It's probably too early to even be talking about this, but what we know about areas that are impacted, such as these, is that people want to go back home. They want to rebuild regardless of potential fire danger. That's how it's been in Los Angeles and California for years. How should we be thinking about that?
Well, sure, people feel connected to their homes. Even if the home is destroyed, they feel connected to the place, and they feel, they feel connected to the life that they had. That's what people want to rebuild. And certainly we will see a lot of rebuilding, but the thing to keep in mind is the world is changing from climate change. And there are places that have been built up that are not necessarily a great place to live now.
And we're not just talking about Southern California.
No.
Florida comes to mind, for example.
Oh, yeah. And I know on the Gulf Coast, there's whole communities, low-lying coastal communities. And every year at certain times, the roads flood.
Right.
And some of them have been told by the local governments, we're not going to pay anymore to fix those roads because they flood every year. And they're like, well, but we live here. How are we supposed to live there? And they're like, you may have to rethink this. This is the world that is changing around us.
This crazy part of what's going on, too, in California, they say the debris and scarred landscape also set the stage for a future disaster since any rain that falls in the area threatens to trigger dangerous mudslides. So
that's a thing, too.
It's the next thing, which is something Californians are familiar with, but it's just kind of tragedy on top of tragedy. Meantime, the California governor, Gavin Newsom, says, let's clear the debris, right? And let's get ready for the rebuild. So we'll see. And also the role of insurance companies and what they're going to help support going forward, because that increasingly is backing off. We'll wait. Thank you so much for the update. Power and Renewable Energy Editor here at Bloomberg News with the latest on the wildfires. Coming up next, Tim, here we go again.
Here we go again. That's right.
Another round of rules for U.S. semiconductor companies. We're going to check in with our own Ian King on what's going on in the semi space today. You're listening and watching Bloomberg Business Week. This is Bloomberg.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. The Dow higher, the S&P, NASDAQ, both in the red right now, with the S&P down 12, lower by 0.2%. Dow Jones Industrial Average up 237, up by 0.6%. NASDAQ down 179, a decline of 0.9%. Big tech getting hit in a renewed bout, the bout of selling that has engulfed powerhouses like NVIDIA, Tesla, and Apple. 10-year, 4.78%, with the 2-year, 4.38%. Spot gold down $31 the ounce, down 1.2%. West Texas Intermediate crude oil now up 3%, $78.89 a barrel. And Bitcoin lower by 2.7%, 91,714 on Bitcoin. Again, recapping, S&P 500 index lower by 12, down 0.2%. The Dow up by 0.5%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, something you are watching, something we are watching, a headline actually that came out just as we kicked off this hour, has to do with the breakup of Honeywell International. According to people familiar, Honeywell is said to proceed with a breakup following pressure from activist Elliott Investment Management, who was calling for Honeywell to split into two independent publicly traded companies, Tim.
Shares of Honeywell spiked nearly 5% on the news. Shares have backed off since, back down to where they were before this news broke. With the details, we got Bloomberg opinion columnist Thomas Black, who writes about the industrial and transportation sectors. He joins us from Dallas. Thomas, where are we when it comes to industrial conglomerates breaking up? Did everybody look at GE over the last couple of years and say, the right thing to do for shareholder value is to split up these large industrial conglomerates?
It's been a long-term trend, and the argument makes a lot of sense. It's let's have more pure play companies, and then we can pick and choose them. It's easier to put a bunch of companies into an ETF, and there you have a conglomerate, right? So the trend is certainly going that way to break up these companies.
Yeah, God, it's hard not to think about General Electric, right? And I think about GE and Honeywell, and I feel like all of those managers that came from GE, and you know, there was this big conglomerate that once was General Electric, and that's been broken up, and this is what's happening to Honeywell. I guess the question is, though, does it make more business sense? Does the balance sheet make more sense when these are purer plays? Do investors want those purer plays?
Well, in the case of Honeywell, it will be advantageous for the new aerospace company that everybody will be able to understand it very easily. It's in a market that's growing. It's very visible. People, investors and consumers touch that market when they get on a plane. Very easy to understand. So that's going to be very beneficial for that part of the business. What remains at Honeywell will still have the Honeywell problem, right? Great brand name, but nobody really knows what it makes and does.
So what would the split look like as of now? What do we know about how the company would be broken apart? What would go where?
So the Elliott folks, and it looks like this is what's being accepted, would basically just break off that aerospace piece and then leave the rest of the company intact. So it would be a fairly straightforward transaction. I don't think it was much of a surprise, and very easy to do because very little overlap from the aerospace business into the other entities at Honeywell. So the big questions would be, you know, how much debt the aerospace company will take on, and how much of a dividend perhaps it would pay the RemainCo to, you know, break it free. So those will be coming along, but a very straightforward transaction.
I mean, so we're breaking up into two, and as we said, one is focusing on aerospace and defense, and you kind of laid out that story and why that clearly makes sense in terms of that business, and that seems the upside. The other one is automation, which feels like, as you said, it feels like a lump of a lot of different things. Is it possible that they do this split, and then there's even more fine-tuning of maybe the automation business, and you know, and maybe on the other side, Honeywell is a very different company?
Yeah, I think there's anticipation that there would be perhaps further splits at the RemainCo, right? It's in kind of disparate businesses. They say it's automation, but it's kind of all over the map. You have building automation and fire systems and all the tech that goes into buildings now, and then you have warehouse automation that helps move your e-commerce packages. Those are really distinct businesses. And then they have an oil and gas component that has a lot of automation as well, which is another very distinct market. And you could go down and down. They have lots of distinct markets in that, what would be the RemainCo front split from aerospace.
Yeah, I totally understand these companies that built up and now, investors want something different. Hey, Honeywell International gained about 7% last year, and as we said, it's just a little bit higher after about a 5% spike earlier in the day. Hey, Thomas Black, thank you so much. So appreciate it. Bloomberg Opinion columnist who covers the industrial and transportation space. Now let's talk about semis, because they're in the news today, too.
Yeah, another day, seemingly another round of rules when it comes to semiconductors. The White House unveiling sweeping new limits on the sale of advanced AI chips by NVIDIA and its peers, leaving the Trump administration to decide how and whether to implement curbs that have encountered fierce industry opposition. With the significance of this, as well as some other news from NVIDIA, let's head on out to our San Francisco bureau and to Bloomberg News U.S. semiconductor and networking reporter Ian King, who joins us from there. Ian, what are these new curbs? How are they distinct from the other restrictions that currently exist or have been discussed? Because I got to tell you, Carol and I were talking about this a little earlier today. It does seem like we keep hearing more and more about curbs on semiconductors out of China.
Yeah, no, that's absolutely true. I mean, China is the largest market, and it seems like it's going to get harder and harder to actually be sending the companies in that area chips. So that's directionally correct. What this is in particular is we've done restrictions on individual chips, said chips beyond a certain capability can't be sent to some of these nations. Now we're looking at this from a more holistic point of view and saying, look, you can't deploy this amount of computing or beyond this amount of computing in certain places without our permission, without our restrictions. So it's kind of going at it from the other end here.
Ian, the rules take effect in what? I think 1 year. Can't or might the soon-to-be new president, Donald Trump, come in and just possibly reverse this?
I mean, that is the big question that everybody is asking, and we would obviously like to know the answer. Clearly, there's going to be a lot of lobbying. There's a comment period that we've got to get through. But yeah, I mean, does this law, does this rule make the transition to the Trump administration?
To what extent, like what companies come under pressure with rules such as these? What are the companies that our investing audience needs to be looking at to understand how these type of restrictions could affect their businesses?
Yeah, I mean, the clear focus is NVIDIA. There are notes out on how that might impact NVIDIA's ability to sell its highest end chips. Various degrees of concern to, well, no, nothing to see here, move along, depending on how you slice and dice it. You will obviously have gone through the large set of restrictions like everybody else, and it's, there are so many variables at the moment. If certain countries, if certain companies seek this kind of status, this kind of guaranteed certified status, then it's kind of business as usual. If they don't, if they want to roll the dice, maybe they want to deploy hardware in other places. So there's a lot of variables here, but obviously we're seeing anything that kind of interrupts that NVIDIA story, given the amount of money that's been put into it, is being seen as, problematic.
Ian, the real big story here is China's growing technological prowess. And I just wonder who actually wins or gets hurt if the U.S. puts restrictions on these companies. Doesn't China just ramp up its efforts in order to either meet what the U.S. is able to do, the capabilities, and do it on their own? And then ultimately, does the U.S.-based companies, just lose?
I mean, it depends who you speak to here, and any one actor or any one person in this conversation will give you sort of two sides of the argument depending upon, what we're talking about. On the one hand, there's a large sort of body of opinion that says they're not even close, and this is our ability, our last kind of chance to cut them off and sort of put them in the penalty box forever. There are others, and NVIDIA is kind of one of those that hints at this, that says, no, all you're doing is engendering competition. You're giving them an extra incentive. You're giving them every reason in the world to go their own way and to leave our sphere of influence. We shouldn't do this. This is a ticking time bomb. But like I've said, there's competing viewpoints here, and people passing the same information and the same technical data in exactly the opposite way. So it's very unclear at this point where the sort of truth lies.
And forgive me if you said this, but I mean, my understanding is, though, there are some things that businesses can agree to to bypass the national limits. And this has to do with security and human rights standards. Is that correct?
Yeah, I mean, there are all kinds of conditions, but it's about kind of achieving this kind of verified end user status, which is basically saying, hey, look, we can show you a paper trail that shows that we are not giving this computing ability to people who you would regard as a bad actor, whatever that bad actor's sphere of, whether it's human rights, whether it's a security risk to the United States or something along those lines. So there is kind of a big out clause here. It's whether companies want to go through that process, want to be restricted, want to sort of have that overhead.
So if a company in China or Russia says, yep, we agree to all this, they'll get whatever they want? Is it that easy? Just quickly.
No, it's not that easy. It's way more complicated than that, unfortunately. It's more interim countries and countries and companies in this country that want to deploy, say, computing, say, in the Middle East or one of these sort of middle ground restrictions countries and locations.
Hey, Ian, while we have you, I want to touch on your story from earlier about NVIDIA and Illumina. It's sort of a healthcare tie-in with what's going on out in San Francisco with the JP Morgan Healthcare Conference. It's the Mayo Clinic, Illumina, NVIDIA. It does feel like there's a big health push, but from the NVIDIA side, how big of an opportunity is this? Because when you've spoken to the folks over at NVIDIA, done the reporting, it seems like they're going for humanoid robots and driverless cars and those sorts of things, right?
They're going for everything. I mean, the humanoid robots and self-driving cars was what they wanted to talk about at CES. Now it's the JP Morgan annual health care conference. So Jensen Huang will be speaking this evening, will be on stage and touting that one. I mean, there's no doubt that they see all of these markets as a massive opportunity and see a deep sense of urgency required to sort of kickstart these industries and get them to embrace this new form of computing. So that's today's pitch. I think that's the best way to describe it.
Yeah, it's kind of fascinating. I was listening to a conversation on surveillance this morning that was talking about kind of the next gen AI or just kind of where the focus goes. And they said it kind of goes for, not so much the consumer-based facing model that we've talked so much about, chatbots and so on and so forth, but actually using mathematical models, right? Especially in something like healthcare or pharma, where they can start playing around with, formulas or drug formulas or DNA and, Ian, ultimately coming up with new solutions. And I guess that's where they're really focusing on, or NVIDIA is trying to kind of push at this point. And just got about 30 seconds here.
Yeah, absolutely. The consumer stuff is kind of almost irrelevant to them. It's nice and it's exciting, but focusing it on industries that have massive R&D budgets that need this computing or might need this computing, that's absolutely the way forward for them, and they're focusing much more narrowly on those opportunities.
Yeah, kind of that business-to-business space. Cool stuff. Ian, thank you as always. Ian King is Bloomberg News, U.S. Semiconductor Networking reporter out there in San Francisco.
Hey, taking a look at markets, we're about 90 minutes from the close, less than 90 minutes. We're off our worst levels of the day. The S&P 500 only down 0.1%. The NASDAQ, Carol, down 0.8%.
We stay with our healthcare focus. Go back to San Francisco, that JP Morgan Healthcare Conference. The head of Morgan Health, the big bank's unit seeking new care models. That's next.
2:40 on Wall Street. We do check markets all day long. Here at Bloomberg, we have got the Dow Jones Industrial Average trading at the best level of the day. S&P 500 index, we'll call it unchanged. Moments ago, it was briefly back in the green. We've got NASDAQ down 130. The NASDAQ Composite Index down 0.7%. A renewed wave of dip buying has driven stocks well off session lows. The 10-year yield 4.79%, with the 2-year currently yielding 4.39%. Gold down 1.1%, $26.60 the ounce. West Texas Intermediate crude oil up 3.1%, $78.93 a barrel. And Bitcoin now down 2.2%, 92,246 on Bitcoin. Sources tell Bloomberg Cleveland Cliffs is partnering with Nucor to weigh a potential joint bid for United States Steel. Right now, we have got U.S. Steel trading higher by 6.5%. Nucor trading higher by 3.8%. Cleveland Cliff shares, they're advancing by 4.9%. Recapping, S&P 500 index now unchanged on the day. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We do want to head back to the West Coast. The 43rd Annual JP Morgan Healthcare Conference is underway in San Francisco. And up next is Dan Mendelsohn. Tim, he is the CEO of Morgan Health.
Morgan Health is a business unit over at JP Morgan Chase focused on accelerating the delivery of new care models that improve the quality, equity, and affordability of employer-sponsored healthcare. Bloomberg's open interest, Katie Greifeld is there standing by. Hey, Katie.
Hey, Tim. Thank you for that. Sitting with me now, as you said, is Morgan Health CEO Dan Mendelsohn. Dan, thank you for joining me in this very busy room.
My pleasure to be here.
So, as Tim and Carol just said, you're a subsidiary of JP Morgan. You invest from JP Morgan's balance sheet. A lot of folks have heard of JP Morgan. Maybe not as many have heard of Morgan Health. Tell us a little bit about what you do.
Look, we're a small group within a storied institution, and our goal is to drive innovation in employer-sponsored healthcare. About half of Americans get their insurance through their employer, and we have an opportunity to help companies grow that will really serve to improve our nation's healthcare insurance, and that's really what we do. So we invest in interesting, innovative companies that are doing great things.
So let's talk a little bit about the portfolio. I'd love to hear a little bit more about how big it is right now, and also a little bit more about the types of companies that you invest in. Where are you seeing the most innovation and opportunity right now?
So right now in the portfolio, we have 8 companies. We've invested about $200 million from the balance sheet. And they're all companies that, again, are focused on improving employer-sponsored healthcare, better primary care, use of data, because, you should expect that your insurance is using data to help improve your care. We have a number of companies that focus on specific areas, like, for example, women's health, autism, and the like.
And so, as you mentioned, of course, your mission here is to improve employer-sponsored healthcare. You started in 2021. What would you say is the biggest challenge facing companies, maybe at the scale of JP Morgan right now today?
Look, the companies that we work with are often really just trying to get in front of employers. I mean, employers often, they're running their businesses, and so they don't really think about improving employer-sponsored healthcare. But like, one of the things that we're doing is helping CEOs to understand that they can expect more from the insurance companies that help them, and there are options for them to actually drive innovation within the systems that they use to bring employees healthcare.
And speaking, of course, about your parent company, you're also working with JP Morgan's benefits teams to enhance the bank's own benefit offerings. What detail can you give us about changes that JP Morgan itself has made?
Yeah, look, we work with about half of our portfolio companies within the JP Morgan Chase benefit. And, I mentioned before, better primary care. So, for example, in Columbus, Ohio, where we have about 40,000 employees and dependents, we have an outstanding primary care clinic that we operate within the business. And, it's got a net promoter score of 88. Our employees love it. And our employees will come in and they'll be able to get primary care. They'll be able to get help choosing a doctor downstream. And look, our goal is to improve the quality of healthcare and also make it more affordable to our employees.
And so, of course, health insurance is one of the biggest topics in America today. There's been a lot of recent attention on how frustrated Americans are with health insurance, of course, in the wake of the murder of United Healthcare CEO Brian Thompson. But it's interesting because most employers actually purchase people's health care and their health plans and then influence also what benefits are offered. So against that backdrop, what do you think that employers should actually be doing differently to address some of these frustrations?
Look, I think the murder was tragic, full stop. That said, I wake up every day working to try to improve employer-sponsored health care, and a lot of the people in this conference are doing exactly the same thing. And so, we're here to figure out, how these insurance benefits can be better. And of course, they can and they should be better. They can be better with better primary care, more focus on quality, use of digital analytics to drive more improvements in healthcare. And so there's really a lot that we can and should be doing to improve the quality of healthcare in America.
And of course, investable opportunities for you, I would imagine. And on that point, Morgan Health is committed to measuring its progress and also sharing data as well. Can you share any concrete signs of how you're doing with us today?
Yeah, look, data is a major thesis for us because employers need to understand the quality and the cost, affordability of healthcare that they're providing to their workers. And without the data, they won't understand. So we did an investment, actually one of our most recent, in a company called Transformative Health. And what they do is help employers really understand what's happening within the benefits so that they can expect more of the insurance companies to work for them.
And Dan, we have time for one more question. And of course, one of the biggest topics at this healthcare conference is the M&A landscape. A lot of optimism about what the second Trump administration might bring in terms of deregulation. I want to talk about what it means for the investment landscape for you specifically. I mean, how are you thinking about how things might change as we get deeper into 2025?
Look, we invest in innovative young companies that need a future, and the future is typically M&A. So they need, in order to progress, they need to be selling into larger organizations, and they need to have that, and to have the flexibility to be able to affect those kinds of transactions will help insurance in the United States, and it'll help employers to get better product to market.
Well, Dan, really appreciate your time today.
My pleasure.
That is Morgan Health CEO Dan Mendelsohn. Back to you, Carol and Tim.
All right. So appreciate it. Katie Greifeld there at the JP Morgan Healthcare Conference. They've been doing it for 43 years every year, and certainly get a lot of news out of the biotech and pharma space. Of course, Katie there with Dan Mendelsohn, who is the CEO of Morgan Health. It made us think about, right, Tim, you and I were talking about, gosh, I don't even know how many years ago.
It's like 5 years ago, more than 5 years ago at this point.
So it was JP Morgan, it was Berkshire Hathaway, and it was Amazon, right?
Yeah.
And like coming together to think about how to do the healthcare space, maybe together as a consortium, think about how to do it together, how to make it better. And I do think as we talk about AI and just technological innovation, I think people are increasingly looking at the healthcare space on all its different levels in terms of R&D, development, but also how the consumer interacts with it, how we can do it better.
I remember that announcement. There was so much optimism around getting folks like this
Massive,
with
right?
The brain power, sort of the innovation of these companies, their commitment to healthcare, thinking, are these the ones who are going to disrupt it and make the system better? And then a few years later, ultimately it ends up disbanding.
Right.
Companies say they learned a lot from it, but if they can't do it, who can?
Well, and I think there's this fear that by creating some massive system, whether it's a massive database, although as a consumer, I'm at a point where I just keep giving my information over and over and over, that it's in multiple systems. Would I like kind of a clearinghouse where there it is, my kind of physical healthcare dossier that anybody can easily, not anybody,
Have
but
you heard
anybody.
of the blockchain, Carol Massar?
Yeah,
That's
there it
that's
is.
the promise of the blockchain.
Like a like a little health digital coin.
The promise of the blockchain, but just a few months ago I was asked to send an MRI on a CD-ROM, so I don't think we're there yet. Let's just say that.
But you do wonder, okay, what's to come in conferences like this?
That really happened, by the way. They use CD-ROM.
CD-ROM.
They use CD-ROM
But
for this stuff.
I do too. It's like, here, you mean take your disc with you, right? Yeah.
Yeah, that's a little crazy if you think about where we are.
I'm just always amazed. It's like, okay, it's all done, and then you're like, it's going to be sent, and then you get there, and it's never there, and then you've got to like get a piece of paper to show, I don't know, the results. Anyway, more to come, and we're going to be having lots more conversations. We just talked about it a little bit with Ian King about NVIDIA.
Jensen's speaking tonight.
Yeah, so look for some headlines out of that. Do not go anywhere. Coming up, folks, from the iPhone to the smart home, Apple's plans for a loaded 2025, and then Sonos's longtime CEO, he is out. We're going to get the details on that when we come back with our Mark Gurman. That's next.
You're listening to Bloomberg Business Week with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, it's a new year. Got to say, I'm already regretting that maybe I bought a new iPhone last fall. I mean, I needed it, and yet, when I read Mark Gurman's Power On newsletter, I'm reminded that an overhaul is coming for Apple's most important product, along with some other cool things from the world's largest market cap company, maybe starting soon, also later this year. With more on that and news, too, that Apple's iPhone sales declined about 5% globally in the final quarter of last year. A lot going on. Mark, there is a lot we want to talk Apple. Got to ask you, the fires in LA, you grew up there, you have family there. How's everybody doing, and how are you thinking about these fires?
Oh, thank you so much for having me. That's very kind of you to ask. Thankfully, I'm okay. Only minor inconveniences here, but it just feels like everyone, including me, knows someone who's lost their home, right? And I've seen the death toll now has topped 20. Obviously, one death is too much, but 20 is a very big number, and my heart just goes out to everyone has been impacted. It's the most horrific disaster that I've seen personally in my lifetime. In fact, it's the biggest disaster that we've had in LA since the '94 earthquake. that was between a 6 and a 7.0. There were a lot of deaths, a lot of damage there. I happened to be born that day, so that's an interesting factoid. But this is just a miserable situation, and unfortunately, while the pollution and the actual disaster itself is going to dissipate in the coming days, the aftermath of this is going to I wouldn't be surprised if it takes 10, 20 years for these homes to be rebuilt, and obviously many lives changed forever. So just it's a terrible thing, and I'm glad I get this little distraction with technology to put my mind elsewhere for now.
All right, so let's talk about that distraction. That is Apple. That is something that certainly when a story pops up done by you or your newsletter, we want to talk to you about it. 2025, how big a year is this for the company and why?
2025 is going to be an instrumental year for Apple. You're not going to see anything pop out of there that's revolutionary or particularly innovative. What you're going to see are some stepping stones towards the future. Let me give you a few examples. One, you're going to see the introduction of the company's first smart home hub. That's something that would compete with the Amazon Echo Show, the Google Nest Hub, and Hub Max. This is a dedicated tablet-like display in your home to control your smart home appliances. It's innovative in the sense that over time, you'll see the smart home offerings from Apple expand. So not this year, but probably next year, you'll see a really cool doorbell device from Apple. This would compete with Ring. It would use Face ID. So when it sees you approach your door, it can automatically unlock it for you, right? But it also would have some of those traditional doorbell features. They're also working on a very privacy-centric in-home security camera. I like to load up my house with different security cameras, indoors and outdoors. But Apple has really created its name in privacy in recent years, right? So having an Apple-made system is something that would probably help put people's minds at ease. Always concerns about who's looking at this footage, how accessible is this footage? Well, people can probably really trust the Apple brand when it comes to storing their video footage. So I think those two smart home products are going to be successful. Later in the year, you're going to see a major iPhone overhaul. There are a lot of Apple employees excited about this. There's the iPhone Air that's going to come out later in the year. That's going to be the thinnest iPhone ever, probably going to be about 20% thinner than the current iPhone. So that's going to be interesting. In terms of stepping stones, making a thinner iPhone, Apple's process of miniaturizing components is going to open the gate eventually for foldable iPhones. So that's going to be quite interesting. The other thing you're going to get this year are a slew of new Macs and iPads. You're going to get an M4 MacBook Air here in a matter of weeks. You're going to get new low-end iPads and iPad Airs in a matter of months. You're going to get a new low-end iPhone, right? They're going to replace the iPhone SE finally with something that's a bit more up to speed with the modern iPhone design, probably coming around $500. I think that's going to be a fairly successful device for them, especially in maybe some of the more emerging markets like India and other parts of Asia. But, the big thing for the year is obviously going to be the phones, and it's always the phones. And the big question is what comes after the phone? That's not something Apple's going to answer this year. And so I think investors are going to be very curious about what's Apple's future at this point, right? The headset's been a dud. The car is dead. What's next, right? They don't really have a major next big thing.
Speaking of what's next, let's talk a little bit about Sonos, because you're out with this big story this morning that everybody is talking about. Some people saying finally, because of all the issues and challenges Sonos has faced, Patrick Spence out after 8 years at the company. Tom Conrad of Pandora fame, Snap fame, coming in. Can he fix the company just in 30 seconds?
Look, Patrick's a great guy. I've met with him and spoke to him countless times. I thought he did a great job, but there was really no coming back from this app disaster. The app is at the very heart of how people control their Sonos ecosystems. They lost the plot on the app. They lost consumer confidence. Someone had to take accountability if they're going to get those sales back. Sales are going to fall again this quarter, according to our estimates. So putting in a new CEO makes sense. This is an interim CEO. I think he's going to end up being the full-time CEO. They won't probably find anyone better. So we'll see what happens.
All right, listen, kiddo, thank you so much, and stay safe to your family and friends as well.
Hey, he's already got a Sonos tattoo, Tom Conrad. So if he becomes full-time CEO, doesn't have to do anything about that tattoo.
Sonos shares were down as much as 10% in today's session, still a decline of about 3.3%. All right, that's going to do it. Our Mark Gurman, Bloomberg News Chief Technology Correspondent out there in the West Coast. For those of you watching on TV, the close is coming your way. Tim and I continuing right here on Business Week.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Matt Piper. A rare warning is going out to Los Angeles aimed at seizing attention for dangerous winds. The hot pink letters from the National Weather Service warn of the extreme wildfire risk beginning at 4 a.m. local time tomorrow. This as causes of the deadly wildfires are still being investigated.
We're looking at everything.
L.A. County Sheriff Robert Luna says they haven't ruled out arson as a cause of the wildfires. Another possibility is a small fireworks blaze in Pacific Palisades on New Year's Day may have reignited. Meanwhile, the Eaton fire may have been sparked by transmission towers. L.A. Fire Chief Kristen Crowley promised a multi-agency task force will find the cause and origin of all of the fires.
To make sure the community knows exactly where and how and when all of this occurred.
Matt Bigler for CBS News, Los Angeles.
At the State Department moments ago, President Biden delivering a speech on his foreign policy accomplishments in his final week as president.
America is stronger. Our alliances are stronger. Our adversaries and competitors are weaker. We have not gone to war to make these things happen.
He's hoping his greatest foreign achievement may happen this week.
We are close to a deal.
National Security Advisor Jake Sullivan.
It can get done this week.
He said President Biden laid out the framework for the deal last June.
That the parties right now are working off of to try to close.
It includes
prisoner exchange for hostages. It includes a surge of humanitarian assistance once the guns go quiet.
They've also worked with the incoming administration to present a united message which says
it is in the American national security interest, regardless of party, to get this deal done.
Stacey Lynn, CBS News, the White House.
William McCool of the U.S. Secret Service on plans for security at next week's presidential inauguration in Washington.
The Secret Service will bring agents and other specialists from field offices across the country to provide a full slate of visible and invisible security measures.
President-elect Donald Trump and Vice President-elect J.D. Vance are scheduled to be sworn in at noon, followed by the official farewell for President Biden and Vice President Harris. As the South cleans up from snowfall that they are not used to, the northern part of the country is dealing with some really cold temps. Meteorologist Craig Allen.
There is a cold weather advisory in effect right through today with wind chills as low as minus 35 or so across the Dakotas from Minot to Bismarck, North Dakota, over to Fargo and into the northern half of Minnesota.
NFL star Patrick Mahomes and his wife Brittany just posting on Instagram the birth of their third child, a girl named Golden Ray. 1 hour left of stocks. The Dow is up 272. Out today in the journal Nature Medicine, a new study from NYU Langone Health and the NYU Grossman School of Medicine, which finds Americans' risk of developing dementia after the age of 55 is 42%, more than double older estimates. That risk translates into an estimated 500,000 cases this year, rising to 1 million new cases a year by 2060, according to the study. CBS News medical contributor Dr. Celine Gounder has more.
There's a lot that the U.S. could be doing now. This ranges from efforts to help improve early detection, reduce risk, and care for people with dementia. This should include interventions to make it easier for people to have healthy diets and to be able to exercise. Other measures include the expansion of specialized housing and memory care units, more use of remote monitoring and in-home technologies, more support for caregivers, and of course, more research on the prevention and treatment of dementia.
Matt Piper, CBS News.
This This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio.
And a very good afternoon, everybody. We are 55 minutes away from the closing bell on this Monday, January 13th. Carol Massar along with Tim Stenivek live in our Bloomberg Interactive Brokers studio. And I got to say, just before we're getting on air, we were glued to our bond screens because we've got a great Bloomberg Big Take that really taps into what's going on in the U.S. Treasury trade. We've just seen such a big move up in yields over the last week or so. In particular, it's a global phenomenon, but we're going to dig into the story in just a moment.
Yeah, Michael McKenzie standing by. We're going to be talking to him in just a few minutes. Also, the latest from LA. We'll be checking in with our entire team out there on the West Coast throughout the next 2 hours. Well, I should say members of our entire team. For updates on the fire, its impact, and already struggling Hollywood. And Carol, just how much damage has been done already from an insurance perspective, too?
Yeah, we know that the California governor is talking about a rebuild, but man, there's just so many steps to get to that point. And I am curious about how many people do want to do that ultimately and come back with concerns about future fires and, of course, climate change. We're also going to speak to the co-founder and CEO of Oxford Nanopore Technologies live from the JPM Healthcare Conference. It's just a reminder of how disruption, innovation continues in the healthcare space. All of that to come, Tim.
First up, though, a check on the day's trade and top business stories. Here he is, Charlie Parr.
All right, thank you very much. And here's what's going on. The Dow higher, S&P, NASDAQ, both trading lower. A little change right now on the S&P 500 index, reversing earlier declines right now, down 2 points. Again, little change there. The Dow up 291 for the Dow, an advance of 0.7%, close to session highs. And NASDAQ down 136, a drop there of 0.7%. A renewed wave of dip buying drove stocks well off session lows following that sell-off that was triggered by a massive recalibration of Federal Reserve rate wagers. We got a lot more on that coming up in just a moment with our Michael McKenzie. 10 years, 4.79%. The 2-year, 4.39%. Gold down $30 the ounce, drop there of 1.1%. West Texas Intermediate crude up 3%, $78.85 a barrel. And Bitcoin just above $92,000 now, down 2.4%. Wall Street, meanwhile, continues to digest Friday's jobs report and what it means for the U.S. consumer. Michelle Meyer is chief economist at MasterCard Economics Institute.
So the labor market is supportive. Wage growth is continuing to run at a solid pace above the underlying pace of inflation for goods and services, and that's supporting consumer spending. As consumers spend, that then further drives this feedback loop back into the labor market.
Michelle Meyer of MasterCard. Sources tell Bloomberg Cleveland-Cliffs is partnering with rival Nucor in a potential bid for United States Steel. U.S. Steel up 6.4%, Nucor up 3.7%, and we've got Cleveland-Cliffs up by 4.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Well, as Carol mentioned, taking a look at the bond market, yields just higher across the curve today yet again. The yield on the 10-year been rising for the last 7 consecutive days, today reaching a high of 4.8%. Carol, it's the highest going back to November of 2023.
Yeah, we sit up and take notice, that's for sure. For those of you who are unsettled by the relentless rise in U.S. government bond yields and across really much of the world as of late, the message from markets is getting pretty clear by the day. Get used to it. It is today's Bloomberg Big Take. It's one of the most read stories on the Bloomberg terminal. When we read in this morning, we're like, no doubt about it, we want Michael McKenzie on.
Michael McKenzie is part of the duo behind the piece. He's a rates reporter for Bloomberg News. He joins us here in the Bloomberg Interactive Brokers studio. The yield on the 10-year, now within sight of that 5% barrier that it briefly hit. Wow, back in 2023.
Yep, October.
Okay. Not seen otherwise since before the financial crisis nearly 2 decades ago. What keeps pushing rates higher?
It's a sense that the economy is showing no signs of really slowing down, and we saw that in the jobs number on Friday. Private hiring really rebounded, so a lot of people who were bearish on the economy and bullish on bonds, that was their big trade coming into this year, that the private sector hiring was going to continue to deteriorate. We didn't see that. We saw a big rebound in private hiring after the election of Donald Trump. So it's a factor here that the economy is seeing continuing to grow. It puts the Fed further in the box in terms of, okay, they cut 100 basis points from mid-September. They signaled in December, we're probably looking to go and have a pause. That's now solidified. we don't see the first rate cut being priced in fully until around November of this year. So the market has now got this idea that, okay, the economy's humming along and inflation is not back to the Fed's target, which means inflation, the risks are now to the upside. Wednesday, we'll get the next installment of CPI, Consumer Price Index. If that shows that inflation is continuing to stay sticky or even trending a little bit hotter than people are expecting, that's when you're going to get another leg in this sell-off. Because it means the Fed is now kind of in the sort of policy error camp. They've cut too early, too much, and then you got to add on to all this, what is the Donald Trump second term going to look like? How is he going to cut taxes? To what extent will he bring in tariffs, which could be inflationary? How is his deregulation efforts going to really stimulate the economy? All this is now in the mix, and when you get a lot of volatility, the last thing you really want to own is long-dated bonds. Because they pack a real punch. They've got a lot. You get a lot of price sensitivity, and so that's why a lot of bond investors came to this year thinking, I'd like to own 5s and 10s, but I don't want to own 30s. And then the final factor, of course, in all of this is the deficit. Is Scott Bessent, who speaks at his Senate confirmation hearing on Thursday, really going to get this 3-3-3 plan? 3% growth, 3% increase in oil drilling, and of course, I guess the other factor here was the 3% deficit. Deficit's currently running around 6-7% GDP. He wants to get that back to 3, but how can he really get that back to 3, given all the entitlements and just the difficulty in cutting spending? And so the bond market's just decided, well, it's better to be vigilant rather than be a vigilante at this moment, to sort of paraphrase PIMCO from last year. But that's how it's looking.
I want to go back to Fed policy, Michael, because what I'm curious is the Fed cuts that they just started, right? As you said, a lag effect. So I guess I can say, cross off the list, that it's not that the Fed cuts have been inflationary, but that maybe it really was a policy mistake and that they moved too quickly.
Well, to the Fed's defense.
Or is it? Yeah.
Well, in the Fed's defense, think back to like June, July of last year. The labour market was starting to really slow down. We had a couple of poor reports. So the bond market got really enthusiastic about this idea. Look, finally the labour market's going to turn materially lower. And so the Fed's 50 basis point cut in mid-September was deemed preemptive, try to get ahead of that slowdown. Then, once that was passed, suddenly, if you look at the city's economic surprise index, it starts spiking. Suddenly things start getting better, and then the Fed only delivers another 25 cut in November, and then finally a final 25 cut in December. But by December, even Jay Powell was saying, look, we've probably done enough. We think, the economy, we could take a pause and wait to see what happens from the Trump policies coming in. But I think what's really happening here is that clearly the Fed has raised rates aggressively from 2022 and got policy right up above 5%. It hasn't slowed the economy down, which means what is the real level of interest rates that has to be in order to slow this economy down, in order to get inflation back to 2%? Now, if the Fed had got inflation back to 2%, they could have declared, right, everything's good.
But they haven't.
They haven't, which means the risk is inflation can kickstart again. Not lost. I mean, you also got to look at the fact that oil prices are kicking up again.
Yeah.
So that's another factor here. And then it gets, if the tariffs come in and it sort of causes all kinds of problems with, trade and in commodities, you could actually see inflation beginning to pick up again as well from supply side sort of constraints. So it's a real mix here for bond investors to get their heads around what is really going to be the driver here.
My first question to you mentioned the fact that we haven't seen yields at 5% since before the global financial crisis, close to 2 decades ago. Is that a fair characterization, though? Because we were in such a low rate environment, an abnormally low rate environment post-financial crisis. Like, that's sort of like, it feels weird to talk about rates being this high right now, but is this just a normalization?
That's what a lot of people are beginning to think. And don't forget, in 2008, the great financial crisis was punishing because you had balance sheets wrecked for homeowners, companies, but more importantly, banks. It takes a long time for a balance sheet-induced recession like we saw to sort of turn around. Now, it did turn around, but then along comes COVID, which was more like FEMA on steroids. The federal government says we've got to spend a lot of money to keep the economy going here. It's a natural disaster, basically. And So what you did was you gave people lots of money, but more importantly, the Fed comes in and it pushed mortgage rates down so low. You have a generation of people in this country who've now locked in the lowest borrowing costs. And that, as long as the employment stays solid, you have people who are shielded. A big proportion of the housing market has a sub 4% or lower mortgage, about 80% if you look at some of the numbers. So while it's hurtful for someone right now to try and take out a 30-year mortgage and pay over 7%, and house prices are higher too, those who locked in 21, 22, it's actually 2021, this is great. So you have a lot of balance sheet strength in the economy, the same for companies as well.
Which is why we continue to see economic growth do okay?
Yes.
I mean, combined with the labor market doing
Absolutely.
just
The
fine.
labor market is key in this. As long as the labor market holds in and people get jobs, then everything points towards this economy just humming along.
So, so what's the thing that makes you a little bit nervous, maybe as you look out at these higher rates being persistent? Like what's the risk out here?
The risk here is that over time it does start to weigh on activity because people will have to refinance. I've been surprised at the resiliency of the car market because that's where you really are paying much higher rates.
Yeah.
But clearly, over time, more people start to move, have to take out a new mortgage. You're going to see that weigh on those kind of higher financing costs are going to weigh on the economy. And over time, it will slow things down. The wild card, I think, is still inflation. This is a Fed that's gone from thinking, okay, Labor was in a bit of trouble towards the end of last year. Now they come all the way back to inflation. So again, the inflation numbers from here are going to be really important.
So quickly we came back to inflation, it feels like.
Well, again, this is a data-dependent Fed, so it's always going to be a hostage to whatever the data is saying and moving, rather than a Fed that's crafting a message that says, look, we think we can stay on hold for this period of time, or this is what our models are telling us.
Which is what we want in a Fed, right? Like react.
Well, you want a Fed that's confident enough that it's got this in hand, and I think the communication from the Fed just contributes to the bond market volatility because you've got bond traders having a second guess. What's the Fed going to say now if they see these numbers?
30 seconds less volatility when Trump does take office and we see what he follows through on?
I think the key for Trump is, and I think he's got some smart people advising him, particularly Scott Bessent, you don't want to do something that really hurts the economy in the form of stock prices taking a big drop. And I think when you talk to a lot of investors at the moment in the bond market, they're saying you should be buying 5s and 10s at these levels because they'll hold in here. He's not going to damage the economy. He's going to be governed by the markets. The wild card, I think, is the long end, the 30-year in particular, given the deficits.
Yeah, that makes sense. Hey, Michael McKenzie, thank you so much. Rates reporter for Bloomberg News. Check out he and the team writing the Bloomberg Big Take. It's on the Bloomberg. Coming up, we get an update on the wildfires out in L.A.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We begin with a developing story. Headlines out of Starbucks. Starbucks is going to be rolling out a new code of conduct for its stores. This according to the Wall Street Journal. According to the Journal, Starbucks is going to require cafe users to be paying customers. Starbucks shares right now, they're up by 1.1%. The Dow, the S&P, NASDAQ all in the red. 38 minutes to go now ahead of the closing bell with the S&P down 104. Selling in the past couple of minutes, down now by 0.5%. We have got the Dow Jones Industrial Average down 124, a decline there of 0.7%. And NASDAQ right now, actually we've got the NASDAQ Composite Index down 0.6%. Just want to correct myself on the S&P. It is up a 1 point now, and the Dow up 333, up by about 0.8%. So to be clear, the S&P will call that unchanged on the day. We've got NASDAQ down 0.7%. 10-year 4.79%, with the 2-year 4.39%. Spot gold down $29 the ounce, down 1.1%. West Texas Intermediate crude up 3%, 78.84 a barrel. As for the Fed and the prospect of rate cuts this year, Nimrit Kang is co-chief investment officer at North Star Asset Management.
Overall, the Fed remains very data dependent. We've got good prints that's put Fed on pause. You know, that's not to say that down the road, this is so early in the year, we might get some other prints that are not that compelling, and we might have the rate cuts back again on the table again.
Nimrit Kang of North Star Asset Management. And again, recapping, S&P lower by 2 points at 58.24, down less than 0.1%. The Dow holding on to a gain of just about 0.8%. NASDAQ down 0.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet, that is a Bloomberg Business Flash.
Hey, Charlie, thanks so much for that update. Well, as the Los Angeles wildfires rage on, millions of residents are preparing for another week of uncertainty. They're packing go bags with vital documents and irreplaceable mementos while keeping watch for evacuation orders. Carol, we talked to Mark Gurman a little earlier, a lifelong Angelino. We talked about, he was born on the day of the Northridge earthquake. He said this is the worst disaster that he's seen in his entire life in Los Angeles. 10, 20 years is what he thinks when people will be getting back to their homes.
I feel like everybody that we talk to, our friends and family that are out there, just say, there's nothing like this, and the impact will be felt for years. We should remind everybody, 2 major wildfires remain largely uncontained, with about 100,000 residents still under evacuation orders as the flames have scorched roughly 40,000 acres. Our Will Wade giving us an update on that earlier. The death count has risen to at least 24 people, and the LA Police Department said it's searching for additional victims, including with dogs trained to detect the scent of human remains. That's something that we talked about last week that they were going to use as soon as they could get into the affected areas.
I mentioned we're covering all angles of this, including what happens when it comes to property and casualty insurance, what happens to the insurance industry, how the insurance industry is preparing for this. We've got with us Matthew Palazzola, property and casualty insurance senior analyst for Bloomberg Intelligence. He joins us here in the Bloomberg Interactive Brokers studio. We spent a lot of time talking to you last week about the latest calculations. Just give us the, not even back of the envelope, but the calculations that you and the team at Bloomberg Intelligence have made as to the impact on the insurance industry and how much it's going to cost to rebuild.
Yeah, so we did a ground-up analysis. What is unique with wildfires specifically in California versus hurricanes and other stuff is you get a lot of more real-time data. So you have CAL FIRE in the state is reporting on the structures that have been destroyed or damaged. So we're basically using that as the foundation of our scenario analysis. We looked at property values in the area, and we basically just said the amount of structures and a range of property values. Now, the problem is, and over the weekend, the amount of structures went up, damaged or destroyed. We still stuck with like 10 to 20 billion of insured losses because the structures can include a lot of things. So it's not necessarily a home or business. It could be a shed or a garage or something like that. So there's uncertainty in the numbers. So we figured we didn't want to just keep chasing those numbers up. So the numbers went from like 1,000 to 5,000 to 12,000. And, as they start to get up, the loss creeps higher and higher. We said, let's just stay with around 20 for now. and we'll see where it goes from there. And as you said, it's mostly uncontained still.
So, Matt, when AccuWeather has raised its estimate for damages and economic losses to between 250 and 275 billion, that's up from 135 billion to 150 billion. They're a commercial forecaster, as we know. They take into account direct and secondary losses. That's including things like lost wages, supply chain disruption. So it's when we hear that number, we have to understand what that means.
Yeah, that is a much bigger number than you're going to see from me. Generally, the economic losses are a multiple of the insured losses. The AccuWeather number that comes out, I mean, they include a lot more stuff, like healthcare costs, a lot of things in there. In addition, they're doing it now, and the event's still ongoing. So, you know, I take those with a little bit of a grain of salt, just because things are ongoing, and you'll see more come out later.
Help us understand different stakeholders here: insurance companies, reinsurers, who's on the hook here, and the flow of information. What does that look like?
So, you know, as we were talking about, you've got CAL FIRE on the ground kind of giving you information as things happen. So that's kind of the first thing. Then you'll start hearing from Wall Street, from Bloomberg Intelligence. You'll hear, you know, what we think might be coming out in the terms of magnitude of losses. Then there are these companies called catastrophe modeling companies, and it is their job to kind of ballpark these things. They sell data to the insurance companies. They sell models to the insurance companies. They will be the ones you'll probably hear from next. But again, the event's ongoing. So I would think that when the event ends, you start hearing from them. They might be feeding their clients, you know, paid clients information now, but that'll be the next thing. And then you'll start hearing from the companies. They may pre-announce if the losses are big enough, which I assume they will be in this case, or you'd wait, because fourth quarter is being reported next week, so you're not going to hear. They might talk about it a little bit, but you still got another 3 months before you'd hear from
Does risk modeling and formulas and all of this change dramatically after an incident like this? Or is it, I know we talked about state by state, but the rethink about climate change, the impact, and how things seem to be growing?
I mean, I think a little bit. I wouldn't say dramatically. Okay. So the problem in the state, and we might have talked about this before, is they weren't even allowed to use these models to price their business. So it almost didn't even matter, you know, initially. California's working with them now, so they came up with this plan that said you can use the models, but then you have to write a certain amount of business in the wildfire-prone areas. I don't think that really attracted the insurance companies. I would say, as a broader theme, the more frequent severe events are tweaking models, but I wouldn't say, you know, dramatically.
Just very briefly, if somebody does rebuild in this area, is it going to be harder for them to get insurance?
I think so. I mean, I can't imagine this does anything to help the fleeing private insurers. I do think, and they're already doing it, they're trying to modify the FAIR Plan like on the go, the insurer of last resort. So I do think they work more with the FAIR Plan and, you know, try to entice companies back.
All right, Matt Palazzola, thank you so much, keeping us up to speed, certainly on the economic and financial and insurance